Yeah, good morning, dear students. Those guys who have joined live, can you please give me one quick confirmation? Is everything technically sound and good so that I can proceed further? Okay, fine. So since everything is technically good, I will try to continue our session now. Right. So welcome back, everybody. So after we have done a series of days of marathon, so let us continue. Yesterday there was a pause. So because of some unavoidable reasons, I have to take a pause. So now in this session, we'll try to continue our marathon series from wherever we have stopped in our previous session. So till now, what and all we have covered in this marathon series till date, what and all we have covered, what and all chapters we have covered. So let us try to have a quick look at that. So first we have done intro part, thereafter we are done with the supply part, then we have seen what is this registration, thereafter charge of GST along with the composition levy, then we have completed this thing called after charge, then we have done composition, thereafter we have done bunch of chapters like time of supply, then we have done value of supply, input tax credit, dedicated one session we have done there, and even place of supply chapter also we have covered. So this is what I guess we have covered. I might have missed out, I think I did not miss out anything, but yeah, to the extent I do remember. So these are all the chapters, these are all the bunch of chapters which we have covered as a part of our previous days. So now what we'll try to do is we'll try to continue further, and we'll try to start now with a few more concepts which are important from the examination point of view. So first what I will try to do is from the tax invoice chapter, not complete tax invoice chapter, I'm going to revise it here, because from the tax invoice chapter once again there will not be any direct question. So but here and there some due dates are there which you have to remember, which will have a linkages. Some due dates will be there, within what time limit, some time limits are there which are very important. Overall chapter they will not ask any dedicated question, but in this chapter there are some important points, there are important time limits which you have to remember, which will have a connection, especially with the time of supply chapter. These are time limits, these due dates for issuing the invoices and all will have a connection. So that we will have a quick recap. Will not spend much time here, hardly some 15 to 20 minutes we'll spend, then we'll proceed further with the subsequent discussion, subsequent chapter will do. So first of all, here in this tax invoice chapter, what I want you to recollect the things is, what are the time limits for issuance of the invoices, what are the time limits for issuance of invoice in different circumstances. So let us try to understand. So all that time limit for issuance of invoices in different circumstances, they all have been given under section number 31. There are various subsections of section number 31. In various subsections, they have spoke about different circumstances. In all the different circumstances, what will be the time limit in case of issuing the invoices that they have clarified. So let us have a quick look at it. So first, if we see 31 subsection 1. Sir, what is the time limit for issuance of invoice in case of taxable supply of goods? In case if you are making taxable supply of the goods, what is the time limit within which you are required to issue the invoice? So they say that in case of supply of the goods, the invoice is required to be issued before or at the time. That means either before or at the time, but not later than this. So in case if the goods are involving movement, I have already told you in the place of supply chapter when we can say goods are involving movement, when we can say goods are not involving movement. That thing we have already covered it in the place of supply chapter. So in case if you are making supply of taxable goods which involves movement, goods are required to be moved from one place to another place. The maximum time limit within which you are required to issue the invoices on or before the removal of the goods. What is the maximum time limit within which you are required to issue the invoice on or before the removal of the goods? In any other case, that means in case if you are making any supply of the goods in which you are not required to do any movement. So I told you one example in place of supply chapter. If you remember that immobile property getting sold with the furniture, so furniture is not required to be moved. So in case of such supplies where goods are not required to be moved from one place to another place, then the invoice is required to be issued on or before delivery of the goods or making available to the recipient. That's all. So this is what you have to remember. So then we have 31 subsection 2, which is talking about what is the time limit in case of issuance of invoice in case of taxable supply of services. In case if you are not making supply of the goods, but in case if you are making taxable supply of the goods, in case if you are not making taxable supply of the goods, in case if you are making taxable supply of services, then what is the time limit within which you are required to issue the invoice? So when it comes to services, you need not give the invoice even before the service. Even after the service also you can give the invoice. After the provision of the service also you can give the invoice. But there is a maximum time limit. Sir, what is the time limit? If you are a usual taxable person, if you are making a if you are a normal if you are a usual if you are making usual supply of services, invoices are required to be issued maximum within a time limit of 30 days from the date of supply of services. Today if I made the supply of service, let us say for example today I have done some ITR filing for one of my client, I am a registered person, I am required to issue the invoice within 30 days from the date of provision of service. Today I am done with the ITR filing, from today within 30 days I am required to issue the invoice. However, especially for insurer, banking company, financial institution, including NBFC, that means some specialized organizations have been told. So in case of insurer, banking company, financial institution, including NBFCs, for these financial institutions, the department has given them even more time limit. They told that these suppliers can issue the invoice within 45 days from the date of supply of service. So for insurer, banking company, financial institution, including NBFC, the time limit within which they are supposed to give the invoices 45 days from the date of supply of service. But when it comes to others, apart from this insurer, banking company, financial institution, including NBFC, for all other people, invoices required to be issued within 30 days from the date of supply of services. Understood? Right. Next. So this is what regarding supply of services. There are some special provisions and all there. So these will not be tested at the CA final level. So you need not worry. So whatever I am stressing, that much you have to remember. So 31 subsection 1 we have covered, 31 subsection 2 we have covered. Then we have 31 subsection 3. In case of continuous supply of the goods. In case if you are making supply of the goods, but it is a continuous supply of the goods. Sir, what is continuous supply of the goods? You are supplying the goods on a continuous or recurring basis. You are supplying the goods on a continuous or a recurring basis, then we call it as continuous supply of the goods. In case of continuous supply of the goods, what is the time limit within which you are required to issue the invoice? So what is the time limit within which invoice is required to be issued? In case of continuous supply of the goods, if successive statements are getting issued, in case if the supplier is giving you successive statements, then on or before that statements. Sir, such statements are not getting given, sir. Only successive payments are happening, sir. Then invoice is required to be issued before at the time of such a statement is issued or each such payment is received. So very simple. In case of continuous supply of the goods, if the supplier is giving periodical statements, then on or before that statement, they are required to generate the invoice for that portion of the goods whatever they have supplied. In case no, sir, supplier is not giving any successive statement. Only payments are happening on a continuous basis. That means on or before certain due dates, payments are only happening. On or before that due date, for that portion, invoice is required to be issued. Then 31 subsection 5 we have what is the time of supply, what is the time limit for issuance of invoice in case of continuous supply of the services. In case of continuous supply of services, what is the time limit for issuance of invoice? But here one thing you all have to remember, sir, what is the meaning of continuous supply of service? For continuous supply of service, an activity will be considered as continuous supply of service where the service is provided or agreed to be provided on a continuous or recurrent basis. The service is getting provided on a continuous basis or on a recurring basis, on a repeated basis under a contract for a period exceeding 3 months. Very important. We can consider an activity as continuous supply of service only when you are providing that service on a continuous basis or recurring basis for a period of more than 3 months. For continuous supply of goods, this condition we don't have. For continuous supply of the goods, we don't have this condition of 3 months. So why? Because if you look at the definition of continuous supply of the goods, they simply say that goods provided or agreed to be provided on a continuous or recurring basis under a contract. That's all. So for continuous supply of the goods, in order to qualify as continuous supply of the goods, that 3 months condition is not there. But in order to qualify as continuous supply of services, so services are required to be provided on a continuous basis or on a recurrent basis for minimum period exceeding 3 months. For a period exceeding 3 months, if they are getting provided on a continuous basis, then only they will qualify as continuous supply of services. Very, very important. This point you have to keep it in mind. Sir, in case if the service is getting provided on a continuous basis, but for a duration of less than 3 months, sir, then what will happen? Then it will be treated as normal supply of services only. You will be governed by the 31 subsection 2. Okay. So, but in case if you are making continuous supply of services, you have to come under 31 subsection 5. Sir, what is the time limit within which invoice is required to be issued? Invoice shall be issued in case here they have told 3 terms. If the due dates are ascertainable. First, we have to check the contract. In case of continuous supply of service, we have to check the contract. So in the contract, check whether due dates are ascertainable. Sir, what is due date are ascertainable? In the contract, have they clearly given any due date for making payment? If yes, on or before that due date for that respective portion, you are required to give the invoice. No, sir. In the contract, due dates are not given clearly, but the contract is drafted in such a manner that due dates are linked with completion of event. due dates are linked with, payments are linked with the completion of event. In that case, invoice is required to be issued on or before the completion of that event. Like after completion of first floor this much, after completion of second floor this much, after completion of third floor this much. So like that, in case if the payment is linked with completion of event, on or before the completion of that event, you are required to give the invoice for that respective portion. Then sir, in case payment due date is not ascertainable, you are making some supply, you are making continuous supply of service. I looked at the contract. In the contract there is no due date given. In that case, on or before or at the time when the supplier receives the payment, before or at the time when the supplier receives the payment, they are required to generate the invoice. Clear? So these are the time limits for issuance of invoice in case of continuous supply of services. Then supply of services ceases before its completion. Supply of services ceases before its completion. You are making supply of the services even before you could complete that service is coming to an end. Ceasing means what? Stopping. So you agreed to make some supply of service, but that service is ceasing, that service is stopping even before you could complete it. In that case, till that portion, till that cessation, till that point of time that service is getting stopped, till that point of time some service has been provided. No, for that portion you are required to issue the invoice. Sir, within what time limit, sir? Invoice should be issued at the time when the supply ceases. Whenever that supply is ceasing, whenever that supply is coming to an end, at that point of time, for that portion of service whatever you have rendered, for that you are required to issue the tax invoice. Then one more special provision we have, 31 subsection 7, which is talking about goods sent out on sale or return basis. Goods is sent out on sale or return basis. You are sending the goods, but you are sending it on approval basis. Let us say, for example, you are giving certain time limit to your recipient, where within that time limit either he can accept the goods or he can reject the goods. So in that cases, what is the time limit for issuance of invoice? They say that in case of goods being sent on sale or return or approval basis, the department will give you maximum 6 months of time. So from the date of removal, maximum 6 months of time will be given to you. If within 6 months supply happens, if within 6 months, if the recipient has accepted and the supply has taken place, on or before that supply, you have to issue the invoice. On or before when the supply has taken place, you have to issue the invoice. Sir, you have removed the goods, 6 months is also over, but still no supply, the recipient has not accepted it. Then what will happen is, on expiry of that 6 months, it will be deemed as if it has been supplied and tax invoice is required to be issued. It will be deemed as if it has been supplied and tax invoice is required to be issued. So this is what 31 subsection 7 says. So if you see it here, where goods are being sent on approval for sale or return, in case if you are sending the goods on sale or return basis, where goods are removed before the supply takes place, then the invoice shall be issued earlier of the following dates. Two dates that are saying earlier of that date, you are required to issue the tax invoice. What are they? Before or at the time of supply. In case within the 6 months, if the supply has taken place, if the recipient has accepted and supply has taken place, on or before that supply, you will give the invoice. But in case 6 months is over from the date of removal, then the department will not wait. It will be deemed as if it has been supplied and you are required to issue the invoice. And here one more thing I would like to say it here. See, initially when you are sending the goods on sale or return basis, initially when you are removing the goods on sale or return basis, at that point of time, has a supply taken place? No, supply has not taken place. Today I am sending the goods. I am a manufacturer. I am removing the goods from my factory, where I am sending it to one of the dealer. But here supply is not happening. Why? Because I am sending the goods on sale or return basis. Now whenever movement of the goods is happening, it should be supported by some accompanying document. No. Whenever movement of the goods is happening, it should be accompanied by some document. Sir, I am removing the goods, I am causing the movement of the goods from my factory to a recipient, but I am not making sale, sir. I am sending the goods on sale or return basis, sir. But that movement should be accompanied by a document. No, sir. Can I give tax invoice here? No, I can't give tax invoice. Why? Because supply has not taken place. Tax invoice can be given only when supply has taken place. Then what will be the accompanying document for that movement of the goods, sir? There will be something called delivery challan. There will be something called delivery challan. So when I am causing the movement of the goods for any reason other than supply, then that movement of the goods shall be accompanied by a document called delivery challan. Why? Because I will not be able to issue the tax invoice there. Clear? Right. So these are all the various time limits within which you are required to issue the tax invoice. And few more things what I would like to cover here is, 31 subsection 3 will be there. There are some special circumstances where different kinds of documents will be issued. There are some special circumstances where different kinds of documents will be issued. Apart from tax invoice, there are separate documents which will be issued in some special cases. What are they also? I will tell you. So there are some special cases which are covered under 31 subsection 3. Various clauses are there under 31 subsection 3. Each clause will be talking about a special circumstance and what document will be issued. First, coming to 31 subsection 3 clause A, which is revised tax invoice. This point I have already clarified when we are looking at the registration chapter. Let us say you become liable for registration registration on certain date. If you are making an application within 30 days for application for registration, thereafter your application will be verified and registration certificate will be granted. Even though you are getting that registration certificate at a later point of time, your registration will be effective retrospectively. If you become liable for registration within 30 days of becoming liable for registration, if you are submitting an application for registration, thereafter if you are getting the registration certificate, even though you are getting that registration certificate at a later point of time, it will be deemed to be effective from the date you become liable. That means you will be deemed to be a registered person from the date you become liable for registration only. Then whatever supplies you have affected from the date you become liable for registration till the time you got the registration certificate, for that you can issue revised tax invoices. It is an optional facility, not mandatory. It is an optional facility. So that is what 31 subsection 3 clause says. And one more thing what they say here is there is a maximum time limit. If at all you want to issue the revised tax invoice, what is the maximum time limit within which you can issue the revised tax invoice? Within 1 month. Within 1 month from which date, sir? Within 1 month from the date of issuance of registration certificate. So you will get the registration certificate now within 1 month from the date of issuance of the registration certificate. If at all you want to give any revised tax invoices, you can give. So revised tax invoice is an optional facility, not a mandatory facility. Clear? Right. Next one. So thereafter, this second point I will tell you. So they say that you will be doing small transactions. Sometimes some small registered persons will be there who will do very small monetary amount of transactions. For that also, if they start giving invoices and all, it will be a very compliance burden. So that's why what the department has told us, in some cases you will not be required to issue the tax invoice. Sir, what are the circumstances I will not be required to issue tax invoice? Very simple. Value of the goods is less than 200. Less than, not less than or equal to. It is less than. So value of the goods or services or both supplied should be less than 200. If it is equal to 200 also, you are required to give the tax invoice. Value of supplied goods or services or both should be less than 200. Recipient must be unregistered person and the recipient does not require such invoice. And the recipient wrote specifically, sir, I don't want the invoice. So 3 conditions: value should be less than 200, recipient must be an unregistered person, and the recipient doesn't specifically require such invoice. In that circumstances, you need not issue the tax invoice. But all the small amount of transactions you have to accumulate it by the end of the day, and you have to generate one consolidated tax invoice. You have to generate by the end of the day, accumulating all that small values. Then we have something called bill of supply given under 31 subsection 3 clause C. Sir, what is this bill of supply, sir? In case if you are a registered person, but if you are making exempt supplies, you are a registered person, you have taken registration under GST Act, but you are making an exempt supply. If you are making exempt supply, you can't collect GST, so then you can't give tax invoice. Then what you will do, sir? When you are making exempt supplies, you can give a bill of supply. Number 2, sir, I am a registered person, but I am a composition dealer. I am a registered person, but I am a composition dealer. Sir, I also can't give the tax invoice. No, sir. Why? Because tax invoice will be given only when the tax is collected. I am a composition dealer, sir. I am not eligible to collect the tax only. Then what I should do? But I am making supply. I need some documentary proof. What I can do? You can give a document called bill of supply. What you can do? Bill of supply you can give. Next, thereafter, invoice come bill of supply. So this is one more simple point. If your recipient is an unregistered person, if you are a registered person, if your recipient is an unregistered person, if you are a registered, so if you are a recipient, if you are a registered person, but if your recipient is an unregistered person, to that unregistered person, you are making a taxable supply also, you are making an exempt supply also. If your recipient is an unregistered person, to that unregistered person, if you are making in a single supply, you are making taxable supply also, you are making an exempt supply also. You are not required to give 2 separate documents called tax invoice and bill of supply. You can give one single document called invoice cum bill of supply. But this can be given only when your recipient is an unregistered person. That is what rule number 46A says. Then one more thing here, 31 subsection 3 clause D, 31 subsection 3 clause E. I will try to wind up in one simple go. Let us say you are collecting an advance. You are collecting an advance. You agreed to make a supply. The supply did not happen yet, but you are collecting an advance. So whenever you are collecting an advance, you have to collect that advance along with the GST. For that, you are required to give, whenever you are collecting an advance, you have to give a document called receipt voucher. Whenever you have collected an advance as a supplier, if you collected the advance well in advance of supply, you are required to issue a document called receipt voucher. Now, whenever you have collected advance, after that 2 things can happen. Against that advance, whatever you have received, you might make a supply. Against the advance, whatever you have collected, you will make a supply. If you make a supply, you will give tax invoice. In case if you have collected advance, in some circumstances, what will happen is you collected advance, but the supply did not take place. Supply was not affected. You collected advance, but because of some reason, supply did not happen. In that case, what you will do? That advance, whatever you have collected, that you will give it as refund. Whatever advance you have collected, that you will give it as refund. So in case if you are giving a refund, you collected advance, you gave the receipt voucher, thereafter supply did not happen, you are refunding it back, then you will give a document called refund voucher. Which document you will give? You will give a document called refund voucher. So when you are collecting the advance, receipt voucher, if against that, if the supply has taken place, tax invoice, in case if you are refunding it, then you will give something called a refund voucher you are going to give. So that is what 31 subsection 3 clause D, 31 subsection 3 clause E. 31 subsection 3 clause F I have already covered, self-invoicing. 31 subsection 3 clause F, I have already covered it, which is self-invoicing. Sir, what is self-invoicing? In case if you are a recipient, in the ITC chapter I have covered this. In the revision only I have covered, not in the regular class. In the revision only, in this marathon series only I have covered in the input tax credit chapter. Self-invoicing 31 subsection 3 clause F. What is that? If you are a recipient receiving the supplies under reverse charge mechanism, you will be liable to pay the amount of GST. If the supplier is registered, if the supplier from whom you are receiving that supplies which are liable under reverse charge mechanism, in case if your supplier is registered person, he will only give you tax invoice. In case if the supplier is unregistered person, then you have to do self-invoicing. As a recipient, you yourself have to do self-invoicing under 31 subsection 3 clause F. So that is what self-invoicing. Sir, what is the time limit for doing self-invoicing? Within 30 days. Within 30 days of receiving the supply, you are required to do the self-invoicing. So there is one more thing, 31 subsection 3 clause G. See, this 31 subsection 3 clause G is also from the perspective of a recipient who is liable to pay GST under RCM. Let us say there is one supplier, he made the supply to you, or he made the supply to a recipient under reverse charge mechanism. Okay, so now this recipient is required to liable to pay the amount of GST to the government. Now, whenever he has made the payment to the supplier, he will issue a document called payment voucher. He has to issue a document called payment voucher. So payment voucher is a document given at the time of making payment to the supplier. So this payment voucher will be given whether supplier is registered or unregistered. In all the circumstances, payment voucher will be given. But self-invoicing will be given only when the supplier is unregistered person. Only when the supplier is unregistered, then only you will give self-invoicing. But payment voucher, you have to give it for every kind of supplier. Whether he is registered, unregistered, doesn't matter. For all the circumstances, you are required to give a document called payment voucher. So this is what 31 subsection 3 clause G. So these are all the special documents. That's all. I don't want to go further. Now one more thing, e-invoicing. So one concept called e-invoicing will be there. So that some people are required to generate e-invoicing. They have to go to the invoice registration portal. From there they will be required to generate e-invoice. So let us have a quick recap for whom it will become applicable. Right. So for whom it will become applicable, sir? E-invoicing will become applicable to all such registered persons who are having an aggregate turnover in any preceding financial year, not in the just immediate preceding financial year. Those registered persons who are having an aggregate turnover in any preceding financial year, starting from the year 2017-18 onwards. That is from the time the GST Act came into picture, starting from the commencement of the GST Act, that is from the financial year 2017-18. In case if their aggregate turnover in any preceding financial year has exceeded 5 crores, then they must issue e-invoices. Sir, what is this e-invoice? First, you will generate an invoice from your ERP. Then you will go to the invoice registration portal. There are some invoice registration portals. So these are all the invoice registration portals. You could visit any of this website and you have to enter. There will be one form, GST INV01 form will be there. That form you have to enter depending on the invoice, whatever you have generated. Then the system will generate. Then this portal will generate something called an e-invoice with a unique invoice reference number and a QR code containing that invoice related details. IRN embedded QR code also will be there. So that is what you call it as e-invoice. Okay, so that e-invoice is required to be generated, and this e-invoice is required to be generated only for B2B supplies. This e-invoice is required to be generated only for what? B2B supplies. For B2B supplies only e-invoice will be generated. Okay, next. Oh, so it is required only for B2B invoices. Now thereafter, a few things which you have to remember. So this table is important if at all they are testing in MCQs. So notified persons, if their aggregate turnover is greater than 5 crores in any preceding financial year starting from 2017-18 onwards, only for B2B supplies along with exports also. Exports. Even for exports also are treated equal to B2B supplies. So for all your B2B supplies, including exports, e-invoice will become applicable. Sir, if I am making B2C supplies, sir, then e-invoice is not applicable. Sir, notified persons issuing invoices for supplies where tax is payable under RCM, sir, applicable. If you are a supplier, if you are making such a supply where your recipient is liable to pay GST under RCM, but still if you are such a supplier, you are a registered person, if your aggregate turnover has exceeded 5 crore rupees in any preceding financial year starting from 2017-18, still this supplier is also required to generate the invoice even though supply is covered under RCM. And suppliers are required to pay GST supplies received by notified person from unregistered person under 9 subsection 4 or import of services, once again RCM only. So these are also RCM supplies. Even in respect of those supplies where recipient is liable to pay the GST under RCM, then also supplier is required to issue the e-invoice. Sir, what about import of the goods? Not required. In case of import of the goods, e-invoicing will not become applicable. Even for import of services also, e-invoice will not become applicable. And for some people, e-invoicing has been exempted, even though their aggregate turnover has exceeded 5 crores in any preceding financial year starting from year 2017-18, but still some people have been exempted from issuing e-invoicing. Sir, who are that people who have been exempted from issuing e-invoice? SEZ units, very important. Only SEZ units, not SEZ developer. only SEZ units. Exemption has been given only for SEZ unit, not for SEZ developer. In case if you have made, in case if SEZ developer is making a supply, if their aggregate turnover has exceeded 5 crore rupees, will they issue a invoice? Yes. Exemption is there only for SEZ units. Insurer, banking company, financial institution including NBFC. Then GTA supplying services in relation to transportation of goods, GTA service providers, supplier of passenger transportation services, person supplying services by way of admission to exhibition of cinematographic films in multiplex screens, basically multiplex theaters. They are also not required to give e-invoicing, or a government department and a local authority. So these are the people, even though their aggregate turnover has exceeded 5 crore rupees in any of the preceding financial year starting from 2017-18, still they are not required to generate e-invoicing. Understood? Then yeah, that's it. So this is what regarding important points from e-invoicing. Then we have dynamic QR code. So there is one more concept called dynamic QR code, nothing but payment related QR code. So the department GST Act has told that they have notified certain suppliers. Those are very big suppliers. If those suppliers, whenever they are making B2C supplies, they have to make the facility of dynamic QR code available. Sir, what is dynamic QR code? Sometimes you go to stores, you scan the QR code for making payment. So once you scan the QR code, payment also automatically will come. They will show you some payment related QR code on some device. No, they will have some electronic device. In that they will show you QR code. If you scan the QR code, you need not even enter the amount also. See, there will be two kinds of dynamic QR codes here. Today if you go to the shopkeeper, on their wall or at their shop, they will keep one QR code attached. You have to scan that QR code. Amount you have to enter manually. Then only you have to make the payment. I'm not talking about that QR code. Sometimes if you go to DMart and all, if you are making a purchase there, if you want to make the payment through UPI, then they will show you one QR code on a device. They will have one credit card kind of device, credit card swiping device like that will be there. They will show you that device. If you on the device, they will show you QR code. If you scan the QR code, amount also will get captured automatically. You are not permitted to enter the amount. If you scan the QR code, amount will automatically come. Just you have to make the payment. That is what we call it as dynamic QR code. Sir, who is required to issue that dynamic QR code, sir? All B2C invoices. See, e-invoices is required for B2B. Dynamic QR code is required only for B2C. But who is required to comply with the dynamic QR code requirements, sir? Those registered persons whose aggregate turnover in any preceding financial year from 2017-18 onwards exceeds 500 crores will have a dynamic QR code. So what they are saying, these are not for small people, very big people starting from the financial year 2017-18. If in any preceding financial year the aggregate turnover has exceeded 500 crores, how much? 500 crores. Your turnover should, if your aggregate turnover starting from 2017-18 has exceeded more than 500 crores, then you will be liable to comply with the dynamic QR code requirements, where you are, that too for B2C supplies, not for B2B supplies. Only for B2C supplies you will be required to show that dynamic QR code, right? Yeah, that much you have to remember. So then even some people, even though their aggregate turnover has exceeded that 500 crores, still dynamic QR code requirements will not become applicable for certain kind of suppliers. Who are that lucky fellows who have been exempted from dynamic QR code requirements? Is, once again, the list will remain more or less common. Insurer, banking company, financial institution including NBFC, GTA service provider, passenger transportation services, multiplex theaters. So this four is common. These four are common. Insurer, banking company, financial institution, GTA, supplier of passenger transportation services, multiplex theaters. These four are common. For e-invoicing also, dynamic QR code also. Now one more thing is getting added to the list, which is OIDR services. Even OIDR service provider is also exempted from having the dynamic QR code requirements. Understood? Clear? Right. That's all here. This is what the things which I wanted to cover from the tax invoice chapter. So I have specifically covered this tax invoice chapters, as I have told, not a direct question. This are due dates of issuing the invoices, what documents will be issued, when e-invoicing. So all these are very important. Why? Because they ask a question from here. Not direct question. Once again, linkages will be there. So linking, there will be one or two questions where connection will be there with these points, whatever we have revised now. So that's why I have covered it. So now next what we will try to do is, we'll try to cover two concepts now. One is TCS, other one is TDS. TCS, like the two concepts are there. Those two concepts we'll try to cover now. Okay, once again, important concepts. Let us try to understand them. Payment of taxes. Just give me 1 minute. So first we'll try to complete the TDS part. Thereafter we'll try to do the TCS part. Chapter number payment of taxes, 11th chapter. Okay. Fine. Got it. Right. So we'll try to do this. Section 51 of the CGST Act, which is going to talk about TDS. So TDS related provisions we'll try to understand. Fine. So what is this TDS concept? So we are going to cover now section number 51. Right. So what is this TDS concept? Let us try to understand it. See, it is very much similar to the concept of TDS under Income Tax Act. Like in Income Tax Act, whatever TDS concept we have, it will be more or less similar. So in GST, we have two parties, no? So one is what? Supplier. The person whoever is making that supply of the goods or services. Then there will be someone called recipient. There will be someone called recipient. The person whoever is receiving that goods or services, that person we call him as recipient. So there is a supplier who is making some supply of goods or services or both. And in return, recipient will be liable to pay some consideration. Recipient will be liable to pay some consideration. Now what the GST Act says is they have notified certain recipients. They have notified certain recipients. So if these recipients are receiving the supplies, recipients once again. So the central government has notified certain recipients. So if you are falling under that notified recipients, and in case if you are receiving some supplies, then what you will be liable to do is you will be liable to pay the consideration. No, when you are paying the consideration to the supplier, don't pay full consideration. When you are paying the consideration to the supplier, don't pay full consideration. Deduct a certain amount called TDS. Deduct certain amount called TDS. So you will be liable to collect TDS. How much, sir? At the rate of 2% you will be liable to collect. Let us say for example, supply of goods or services is happening. The amount of consideration is actually 10 lakh rupees. 10 lakh rupees. On that 1,80,000 rupees of GST, total invoice has been given for 11,80,000. So practically speaking, ignore the GST part now. Just look at the value. So you are liable to pay 10 lakh rupees of value. Excluding GST, you are liable to pay 10 lakh rupees of value to the supplier. But the GST Act says if you are such a recipient who is falling under notified recipient, we will notify certain recipients. If you are falling under that notified recipients, what you are required to do is from the value which you are liable to pay to the supplier, don't pay full amount, deduct to 2%. So now if I do that calculation, 10 lakhs is the total value. On the 2% if I calculate, the amount will come to 20,000. So this 20,000 you deducted, and balance 9,80,000 rupees only you pay to the supplier. From the value, GST amount anyhow you will pay fully. So from the value you deduct 20,000 rupees and pay only 9,80,000 rupees to the supplier. So now with this amount whatever has been deducted, with this 2 lakh rupees, with this 20,000 rupees, whatever has been deducted by the recipient, what he will do with that money, sir? What he will do with that money? Can he enjoy with that money? No. So whatever amount that has been deposited, whatever amount that has been deducted, that you deposit with the GST department. That you deposit with the GST department using the GSTIN number of the supplier. The supplier we have GSTIN, no, quoting that GSTIN number. So you deposit that 20,000 rupees of GST with the GST department. Okay, the amount is this 20,000 rupees is now lying with the department. Now what will happen is this supplier, since he has made outward supplies, he will be filing his GSTR1, no. He will be filing his GSTR1. So in this GSTR1, he will declare this outward supply. Now, how much he will declare? Not 9,80,000. Total value he has to declare. Sir, he received 9,80,000 only. No, yes, but still you have to declare total value of outward supply as 10 lakh rupees. So now what will happen in your GSTR3B and all? This liability will come. So let us say in your GSTR3B again is this 1,80,000 rupees of liability will come. But the supplier is not a fool to pay 1,80,000. Why? Because his money has been already deducted. No. So whatever amount that has been deducted by the recipient and which has been deposited with the GST department, that this supplier can claim that amount in his electronic cash ledger. So where he can claim electronic cash ledger. So in the electronic cash ledger, this supplier can claim that amount. How much amount he can claim, sir? That 20,000 rupees, whatever TDS which has been deducted by the recipient and deposited with the GST department against the GSTN of the supplier, that you can claim where in your electronic credit ledger you will claim that money. And that 20,000 rupees, that you can use it for discharging that payment. So your money is only deducted, no, so that your money, whatever has been deducted from you, recipient has deposited with the GST department, that you can claim it as credit in your electronic cash ledger. Not credit, my dear students, you can claim it in your electronic cash ledger. That means if the amount is lying in the electronic cash ledger, either you can use it for discharging your liabilities, or even what you can do is you can withdraw also. Amount lying in the electronic credit ledger, you can't withdraw, that can't be refunded except in certain circumstances. But the amount lying in the electronic cash ledger can be freely withdrawn, without any restriction. So you can withdraw that money, or either you can use it for discharging that payment. So this is what the concept of entire TDS. This is what the concept of TDS. So now we have to understand few things associated with it. Sir, you told recipient is a notified recipient. Sir, when TDS will become applicable? TDS will become applicable subject to some conditions. To become TDS for being applicable, there will be some conditions. Number one, the recipient should be a notified recipient. The recipient should be a notified recipient. Not for every recipient TDS will become applicable. The recipient should be a notified recipient. Number two, value of supply under a contract should exceed certain amount. Value of supply under a contract should exceed certain amount. Sir, what is that amount? 2,50,000. Value of supply under a contract. So as a recipient under a contract, if you are receiving such a supplies for which the value of supply is more than 2,50,000, then only TDS will become applicable. So primarily, mainly two conditions. What are the two conditions? Number one, recipient should be a notified recipient. Number two, value of supply under a contract. That means under a contract, whatever value of supplies which he is receiving from such supplier should be more than 2,50,000. Then only TDS will become applicable. And if TDS is becoming applicable, TDS will be deducted at the rate of, in case if it is a intrastate supply, CGST 1%, SGST 1%. If it is intrastate supply, SGST or UTGST. In case if it is an interstate supply, then collectively IGST at the rate of 2% is required to be deducted. Okay, right. So now we have to get the clarity on, sir, who are that notified recipients? And one more thing here, throughout this, we are going to use one more terminology. This recipient will be called as deductor. Why? Because he is deducting TDS, no? So this recipient will be called as deductor. So just give me 1 minute. So this recipient will be called as deductor. Whereas this supplier against whom the TDS is getting deducted, that person will be called as deductee. Okay, so going forward through the rest of the chapter, we are going to use these terms. Deductor. Deductor means a recipient because he is deducting the TDS. Deductee means a supplier because from him the TDS is getting collected. Right. So first let us see who are that persons who are notified recipients who will be liable to collect the amount of TDS. So let us see. Not everybody, only these people. Who are they? So central government has mandated specified persons to deduct TDS. Who are they? Number one, central state government department or establishment. Or if I have to put it in other terms, department or establishment of central government or state government. Except Ministry of Defence. So when it comes to Ministry of Defence, only for a few departments of Ministry of Defence, TDS will become applicable. For rest of the departments, TDS will not become applicable. So generally, first specified person who is required to deduct TDS is department or establishment of central government or state government. Generally, it will become applicable for all departments or all establishment of central government or state government except Ministry of Defence. So in the Ministry of Defence, only for a few departments TDS will become applicable. For the remaining departments of Ministry of Defence, TDS will not become applicable. So that's what I say here. TDS is applicable to certain prescribed authorities of Ministry of Defence. Remaining departments of Ministry of Defence are exempt. Similarly, local authority, if the recipient is a local authority, or if they are a government agency, or any other notified persons or category of persons. So initially department has notified only 3 people. Who are they? Central government, state department or establishment of central government or state government, local authority, government agency. They have reserved a power. We can notify any other persons also. Under 51 subsection 1 clause D, they have reserved the power. In future, if we want to bring extra people under this recipients category who are liable to collect TDS, we will notify. And actually government has notified a few people under 51 subsection 1 clause D. Who are they? An authority or a body. So under clause D, these are the people who are notified. An authority or a board or any other body set up by an act or parliament or state legislature or established by any government in which 51% or more equity or control is by government. So any authority, any board or any body which is established by an act of parliament or a state legislature or which is directly established by any government with 51% or more equity must be there by government, or a society which is established by central government, state government, local authority under Societies Registration Act, or it could be a public sector undertaking and registered person receiving supplies of metal scrap from other registered person. So this was latest addition. So these three are all government. See, till now if you could see, starting from this and all this till here, it is government related entities. But recently they have added one more person to the list who is required to collect TDS, who is if the recipient, there is a supplier, there is a recipient. If this recipient is a registered person and the supply what he is receiving is metal scrap, the supply what he is receiving is metal scrap from a supplier who is also a registered person. There is a recipient who is a registered person who is receiving the supplies of metal scrap from another registered person. Then this recipient is also required to collect the TDS. Then this person is required to collect the TDS. Understood? Clear and comfortable, everybody? So these are the notified recipients. So this list you have to remember. But however, they have given one relaxation. They have given one relaxation. What relaxation they have given? You know, if the supply is happening among these entities only, if the supply is happening between these entities only, between these notified persons, among them only if the supply is happening, then TDS will not become applicable. Sir, what do you mean by that? Let us say, for example, one PSU making supply to another PSU. That means supplier is also a specified person, recipient is also a specified person. No need to deduct TDS. Or one government department is making a supply to local authority. Among the specified persons only if the supply is happening. No need to deduct TDS. Except this, except the last person. Except this last person. So which means what? Let us say, for example, if the PSU, let me put it this way, if the PSU is making supply to a local authority, both are specified persons only, no, both are specified deductors only. So in that case, TDS will not become applicable. On the other hand, let us say if the PSU is making a supply to another registered person, but he is receiving the supplies of metal scrap where this PSU is also registered person. See, both are specified recipients only, but still TDS will become applicable here. TDS will become applicable here. Able to understand? So if among these entities only, so we have seen the notified list, no? We have seen notified persons list, right? So what they are trying to say here is, if the supplier and recipient both are falling under till here, not the last one. So if the supplier and recipient among them only, that means one department is making supply to local authority, or they are making supply to government agency, or this authority is making supply to them, or they are making to PSU. So like that, among these entities only if the supply is happening, then the TDS is not required to be deducted. However, if this is registered person receiving supplies of metal scrap, then TDS will become applicable. Okay, right. And okay, so who are the notified persons we have seen? Now let us see limit. What is the limit? Sir, when TDS will be deducted? When TDS will be deducted? They say that suppliers whose total value of supply of only taxable, see here, if the value of supply, if the total value of supply of only taxable goods or services, that too under a contract, if they exceed 2,50,000 exclusive of taxes and cesses as per the invoice, then only TDS will become applicable. So what they are saying, when TDS will become applicable, what is the prescribed threshold limit? So TDS will become applicable when the value of supply under a contract. And there are few points which you need to keep in mind. When you are calculating the value of supply, take only taxable supply. Take only taxable supply. Don't consider exempt supply. Take only taxable supply. Take only taxable supply, not exempt supply. Value of taxable supply should be taken, not the exempt supplies. Sometimes in the invoice you will be able to find taxable value also, exempt supply also will be there, but you have to take only taxable value. Exempt supplies are there, those values you should not consider. And you have to check when you are considering this value of supply, consider the value exclusive of taxes. When you are checking this limit of 2,50,000 rupees, the 2,50,000 rupees I am referring to the value exclusive of taxes. Don't take the figure inclusive of taxes. Let us say, for example, value of supply is 2,40,000. Applicable rate of GST is, let us say, 15,000 rupees. So 2,55,000. Is TDS required? Not required. Why? Because you are required to consider only value of the supply excluding the taxes only you are required to consider. And you should not look at individual transaction. You have to look at the contract. In a single contract, how much supply has been made. Let us say there will be one single contract, but under one single contract, let us say 4 invoices are given. In one invoice, 2.2 lakhs is the value. In another invoice, 1.5 lakhs is the value. In another invoice, 50,000 is only value. So will TDS become applicable? Yes. Individually, the amount could be less than 2,50,000, but total value of taxable supply under a contract if it has exceeded 2,50,000. So if you see here, all the invoices are belonging to one contract where the value of supply under a contract has exceeded 2,50,000 rupees, TDS will become applicable. Understood? Clear? Next. And what is the rate of deduction? As I've already told you, if it is intrastate supply, CGST at the rate of 1%, SGST at the rate of 1%. If it is intrastate supply, IGST collectively at the rate of 2%. However, and on what value? Sir, this 1%, 2% on what value you will calculate, sir? So will you calculate that 1% or 2% rate of deduction on which value? Value inclusive of taxes or exclusive of taxes? Value exclusive of taxes. That's why I told here, even in the examples also, value of supply is 10 lakh rupees, amount of GST is 1,80,000, total 11,80,000. But we calculated TDS only on 10 lakh rupees. So you have to calculate the TDS on that portion of the value excluding the taxes. Excluding the taxes, what is the value you have to find out? On that value, you have to calculate that 1% or 2%. Next, see, there is one more case. There is one more exception. This you have to remember. There is one more exception when TDS will not become applicable. So exception means all the conditions are getting fulfilled. That means recipient is a specified recipient, value of supply under a contract has exceeded 2,50,000, but still TDS will not become applicable in one case. In which case, sir? So they say that when the location of the supplier and the place of supply is in one state or union territory. When the location of the supplier and the place of supply, if both are falling within a same state or union territory, which is different from the state of registration of recipient. So if I will simply call it as location of recipient. So if the location of the supplier and the place of supply both are falling within same state or union territory, which is different from the state or registration or state of which are different from state or union territory of registration of recipient, then TDS will not become applicable. Even though the recipient is a specified recipient, even though the value of contract, value of supply under a contract, sorry, just 1 minute. So sorry for that. So it was connected to my mobile is connected to my laptop, so that's why it started making sound. Just 1 minute. Yeah. Fine. So what I was saying is there was one exception. So what is that exception? In case if the location of the supplier and the place of supply both are falling within a single state or union territory, which is different from the state or union territory of registration of the recipient, then even though recipient is a specified recipient, even though value of the supply under a contract has exceeded 2,50,000, still TDS will not become applicable. Sir, what exactly they are trying to say it here, sir? I will give you one simple example. I'm not going to explain the background logic for you, but I will tell you one simple example why in this particular case TDS will not become applicable. Let us say location of the supplier is in Tamil Nadu. Place of supply is also Tamil Nadu. Whereas location of recipient is Karnataka. Here TDS will not become applicable. Why? Because location of the supplier and the place of supply both are falling within a same state or union territory, which is different from the state or union territory of registration of the recipient. So here location of the supplier, place of supply both are falling within Tamil Nadu, but the state of registration of the recipient is Karnataka, which is different from the both. In that case, TDS will not become applicable. I will tell you one simple logic why. See, let us say let us take this example only. There is a supplier where he is located Tamil Nadu. So where is recipient located? Karnataka. Recipient is located in Karnataka. But I told what? Place of supply is also falling in Tamil Nadu. Let us say renting of immobile property, something like that. So place of supply is also falling in Tamil Nadu. So when the location of the supplier, place of supply, both are falling in same state, which is what supply? Intrastate supply. Which is what supply? Intrastate supply. So on this intrastate supply, what will be applicable? CGST, SGST will be applicable. So let us say this recipient is a specified recipient. Value of the supply under a contract has also exceeded 2,50,000 rupees. Now he is required to deduct TDS. No. Which TDS he will deduct? Since it is an intrastate supply, he has to deduct CGST at the rate of 1%. Let us say value of the supply is 10 lakh rupees. So 10 lakhs into 1%, 10,000. SGST also 1% he has to calculate. Which SGST he will calculate? He has to calculate Karnataka. Since he is registered with the Karnataka state, Karnataka GST he will pay. He will deduct and pay. How much? 10,000. But here what will happen is this supplier where he is registered, Tamil Nadu, no. How this transfer will happen? How he can take that credit in his electronic cash ledger? He is having CGST of Karnataka state. He is also having SGST of Karnataka state because he is registered with Karnataka state government. No. So now how he can claim it in his electronic cash ledger? because he's registered with Tamil Nadu state government? No. So the state related transfers are quite difficult under GST? No. So that's why what they have told. In this case, the states will unnecessarily fight. We don't want headache. Central government told in this case, TDS concept itself will not become applicable. Why? Because different state governments are involved here. So it will unnecessarily create a huge mess. So they told in this case, we don't want TDS only. You state governments don't fight. We don't want TDS in this case at all. Clear? So this compulsorily you have to remember, when the location of the supplier and the place of supply both are falling within a same state or union territory which is different from the state or union territory of registration of the recipient. You remember it, get this printed in your brain. Location of the supplier, place of supply, both are falling within a same state or union territory which is different from the registration, which is different from the state or union territory of registration of which is different from state or union territory of registration of recipient, then TDS will not become applicable. Even the recipient is a specified recipient, even though the value of supply under a contract has exceeded 2,50,000 rupees. That's it. Fine. So here I have given one table also illustrating all the circumstances. Just have a quick look at it. You will get the clarity. Then what will happen? Sir, you are saying the deductor, after he has deducted the TDS, that amount is required to be deposited with the government. Sir, what is the time limit for that? Time limit is by 10th of the succeeding month. By 10th of the succeeding month. So let us say in the April month, the TDS has been deducted. It has to be forwarded to it has to be paid to the government by 10th of the succeeding month, by 10th of May, by filing one return, GSTR 7. So this deductor will file one GSTR 7. The due date for that is also same, 10th of the subsequent month. So along with filing of the GSTR 7, this amount will be deposited with the government by 10th of the succeeding month. And the supplier will be there, no? Supplier will be there, right? Against whom? Whose TDS has been deducted? So this person. So this person will file GSTR 7. Recipient will file GSTR 7. Now there will be a TDS certificate which will be made available to the supplier. GSTR 7A. In GSTR 7A, TDS certificate will be made available. Like in Income Tax Act, we have 26AS. No. If we have TDS getting deducted from our various sources of income, how much TDS has been deducted against us? We want to know. How do we know? They will make us available one 26AS statement. No. Similarly, even in the case of GST also, for the deductee, what is the amount of TDS deducted? The TDS certificate will be made available in GSTR 7A. Sir, what will be the contents? What will be the contents that you can refer to it once? Then in case if it is not remitted, interest will be payable, and whatever that TDS amount is there, that you can claim it in your electronic cash ledger. And this TDS deductor is required to obtain separate registration. If you remember the discussion under section number 24, the persons who are liable for compulsory registration, we have seen that there are some categories of the persons who are liable to get compulsorily registered. In that, one such person who is liable for compulsory registration is the person whoever is required to deduct TDS under section number 51. And the person who is required to deduct TDS under section number 51, the TDS registration is a separate registration. TDS deductors registration is a separate registration apart from usual registration. Even though you have a usual registration, but still in case if you are liable to deduct TDS, you have to take separate TDS deductor registration. You have to take it under section number 51. Clear? Right. So this is what regarding TDS concept. Now what we'll try to do is TCS will try to cover e-commerce operators. So when it comes to e-commerce operator, taxation things are little different. One thing we are already aware. Right. So when it comes to e-commerce transactions, the taxability is going to be quite different. The way the transactions are going to get taxed is a little different. So I will tell you one thing we already know. In case of e-commerce transaction, one special tax treatment we already know. So what is that one tax special treatment? What is that one special treatment of tax which we are already aware? 9 subsection 5. If you remember, there are certain services which are notified. So if you remember long ago in the charge of GST, I have told there are 3 mechanisms. There are 3 mechanisms by which the GST revenue will flow to the government. One is forward charge mechanism, where the supplier will collect the amount of GST from the recipient and pay it to the government. Other one is reverse charge mechanism, where the recipient only will directly pay the amount of GST to the government. Third one is 9 subsection 5. In case if notified services, the government has notified services, 6 services they have notified. Do you remember? 6 services they have notified. Those 6 services, if those services are getting supplied through the e-commerce operator, if I have to make you recollect it, passenger transportation services by other than omnibus, passenger transportation services by omnibus other than body corporate, accommodation services, housekeeping, carpenting, these kind of services. Thereafter, what is one more thing? this recent one, local delivery services. So like that, altogether some 6 services have been, food delivery services. So like that, 6 services have been notified. If these services are provided through the e-commerce operator, then neither the supplier nor the recipient will pay the amount of GST. E-commerce operator will collect the amount of GST from the recipient and pay to the government. That is one thing, one special taxation treatment. Now we have one more special case in case of e-commerce transactions. They say that if you are a supplier, let us take one Amazon. Let us take Amazon. Amazon is an e-commerce operator. So now if you are a supplier, you are enlisted on Amazon. You listed your products on Amazon. Let us say you are a dealer of what dealer? Let us say you are an electronics dealer. You are an electronics dealer and you have listed your products with Amazon. Now your products will be shown to the people, whoever is visiting the Amazon. So now there is one recipient. So you are a customer. So this customer wants to buy one laptop. Okay. So now he opened Amazon. He searched for the laptop model he wants. He placed an order. So in the Amazon, he placed an order, but Amazon is not supplying it. Amazon is not supplying it. So through that Amazon, one supplier will be supplying it. So you placed an order with the Amazon. So that order will be forwarded. So you place an order on the Amazon. Amazon will forward that order to the supplier. Now what supplier will do? Supplier will do the dispatch. Supplier will directly send that goods to you. They will dispatch that goods to you. So who is the supplier? That original supplier who is listing his products on the e-commerce operator. You are the recipient. Now what is the role of Amazon here? They are mediator, aggregator. They're just an aggregator. They are not a supplier. They are just an aggregator. So this supplier is making supplies through the Amazon. Now what actually happens is you will pay the consideration. Let us say 1 lakh worth of laptop you are buying. That 1 lakh worth will be received by the Amazon. Now what Amazon will do? Amazon will deduct their commission and all will be there. There are all other charges they will deduct. After deducting all other charges, they will remit the amount to the supplier. They will remit the amount to the supplier. But the settlement might happen monthly. So you are paying the consideration to the Amazon. Now Amazon will deduct their expenses, their commission, their charges they will deduct, and balance amount they will remit it to supplier. Now what section number 52 of the GST Act says is these e-commerce operator, when they are settling the amount to the supplier, after their charges and all, don't pay the full amount, deduct one more amount. Let us ignore here charges are not there. Here charges are not there. Let us say 1 lakh rupees is required to be paid. But they have told this e-commerce operator, you don't pay that full amount. You deduct TCS at the rate of 0.5%. How much? At the rate of 0.5%, you collect the TCS. So how much amount you will get it? So if you do that here, I think if I'm not wrong, 500 rupees will be collected and 99,500 rupees only will be remitted to the supplier. So like this, they have put a responsibility on the e-commerce operator to collect a TCS under section number 52 from the amount which is required to be settled to the suppliers. And what Amazon will do with this TCS amount, sir? Can they enjoy? No, sir. They are required to deposit. They are required to deposit it with the GST department against the GSTIN of the suppliers. Against the GSTIN of the suppliers. Now what the suppliers can do? They can claim that TCS amount in their electronic cash ledger. Where they can claim it, they can claim that amount of TCS deducted in their electronic cash ledger, not to their electronic rate ledger. You can claim that amount in your electronic cash ledger. I already told you what is the advantage of having that amount getting created in your electronic cash ledger. If the amount is created to electronic rate ledger, you can only use it for discharging your output tax liability. You can't claim it as refund unless in exceptional circumstances. But if the amount is getting created to your electronic cash ledger, either you can use it for discharging your liabilities. If you don't have any liabilities to discharge, even you can withdraw that money also. So that advantage will be there. So this supplier can claim that TCS amount in his electronic cash ledger. Clear? Able to understand here? Comfortable? Now. So this is what overall TCS concept here. Now one more point which I have to say it here. Only those supplies which are made through e-commerce operator other than 9 subsection 5. Supplies which are made through e-commerce operators which are other than notified under 9 subsection 5, on that only TCS will be collected. This point also have to remember. For that 6 services which are notified under 9 subsection 5, if those services are getting supplied through the e-commerce operator, TCS will not be collected. TCS will be collected on those supplies which are supplied through the e-commerce operator, that too other than notified under 9 subsection 5. Those services should not be notified under 9 subsection 5. So apart from that 6 notified services, if any other services or goods also, on goods also TCS will become applicable. So services other than 9 subsection 5, or if any goods which are getting supplied through the e-commerce operator, then the e-commerce operator will be liable to collect the amount of TCS at the rate of 0.25, at the rate of 0.5%. Okay, so that's what they try to say it here. Okay, so at the rate of 0.5% on net value. Now, sir, how this 0.5% will be calculated? On what value 0.5% will be calculated? So let me show you that also. So what is the value on which this 0.5% will be calculated? So that 0.5% will be calculated on net value of the taxable supplies. What they say here, where is it? See here. So this is 0.5%. Yeah. What is the value on which TCS is to be collected? TCS at the rate of 0.5% is collected on net value of taxable supplies. Sir, what do you mean by net value of taxable supplies? Total supplies made through that e-commerce operator in a month. So this individual supplier, whatever total supplies he has made through the e-commerce operator in a month, from that total outward supplies, they have to reduce the returns also. In e-commerce business, it is quite common today in Amazon, Flipkart and all, returns are quite common. So they will take total value of outward supplies minus returns, then you will get the net value. In that net value, you will be liable to collect the amount of 0.5%. Okay, so that's what they say. TCS at the rate of 0.5% is collected on net value of taxable supplies, that is aggregate value of taxable supplies excluding services taxable under 9 subsection 5. This I have already told you. So while calculating that 0.5%, so supplies taxable under 9 subsection 5 will not be taken. Why? Because those supplies which are notified under 9 subsection 5 on the TCS will not become applicable. So aggregate value of taxable supplies excluding the services taxable under 9 subsection 5 made in a month by all registered person through an e-commerce operator minus value of supplies returned. So then on that value you have to calculate. Sir, let us say in a month my sales are 10 lakhs, but my returns are 12 lakhs, sir. Possible? In a sale through the e-commerce operator, the sales are 10 lakh rupees, but the returns are 12 lakh rupees. Possible? Can the returns be more than sales? Will it be possible? Yes, it is possible. Last month sales, this month you are having returns. Possible? No. Last month you made the sale. By last 2 days, let us say on 30th of the last month you made the sale. 7 days return policy we have. No. In the current month it will get returned. Yes, it could be possible. So if the sales are more, net value of taxable supplies for TCS is computed monthly. This one, where sales returns exceeds the sales, negative value cannot be declared and excess returns are ignored. Excess 2 lakh rupees of returns are there, sir. What will happen to that? Ignore. Sir, can I carry forward it to the next month and adjust it again as the taxable supplies of the next month? Can I carry forward this? 2 lakh rupees of returns are there. No. Net I have negative balance. Can I adjust it again as the next month balance to calculate that 0.5% of TCS? No. That month gone. Over. Ignore it. If you got negative value, if your returns are more than sales, ignore that negative value. No carry forward to the next month. It will not be carried forward to the next month. Ignore then and there. Okay, right. Next. And also TCS is not required on supplies where recipient is required to pay GST and reverse charge mechanism. Let us say if some service is getting supplied through e-commerce operator, but on that services RCM will become applicable, then also TCS provisions will not become applicable. And also TCS is not required on import of services also. In case if you are importing the goods or services, then also TCS will not become applicable. Okay. And one more point I will say where TCS will not become applicable. See, this point is also very important. See, TCS provisions under section number 52 will become applicable only when consideration is routed through e-commerce operator. I think I lost power. The light might be little dim. I think it's not be troubling. It will not be troubling, I guess. So I lost access to the power. So the light is only I'm running on studio light. I think it is manageable. No issue should be there. Fine. So yeah, what I was saying is TCS under section number 52 will become applicable only when the e-commerce operator has collected the consideration. When the consideration is routed through the e-commerce operator, then only TCS will become applicable. In case if the consideration is not routed through e-commerce operator, if the consideration is not routed through the e-commerce operator, if the consideration is directly paid by the recipient to the supplier, then there is no concept of TCS. Yes, there are some e-commerce platforms available today which will only act as listers. Like for example, we used to have we have OLX. OLX, if you remember, if you want to sell your goods, that you can list it on your OLX. OLX is only listing platform. OLX will collect only buyer and seller. In case if they want to make a transaction, the buyer will directly pay the amount to the seller. It will not be routed through the OLX. So in that cases, TCS will not become applicable. TCS will be very simple logic here. if the e-commerce operator has to collect that amount, first they should have collected the consideration. No, if they did not collect the consideration only, from where they will deduct that 0.5%? Not possible. So that's why TCS will become applicable only when the consideration to the supplier is routed through e-commerce operator. In case if the consideration is not routed through the e-commerce operator, consideration has flown directly to the supplier from the recipient, then there is no question of this TCS getting collected. So this is also one point you have to remember. Now, sir, few more points I will try to say it here. Let us say if there are unregistered persons, sir, if there is an unregistered person who is making the supply of the goods or services through e-commerce operator. If there are unregistered persons who are making supply of goods or services through the e-commerce operator, will it be possible? Yes, it is possible. Yes, it is possible. Even though you are an unregistered person, still you can make the supply of the goods or services through the e-commerce operator, sir. In that case also, will e-commerce operator collect a TCS? No. No. In that case, e-commerce operator will not collect the amount of TCS. This is also one more exception. So let me show that to you. Where is it? Okay, it is there somewhere here in the material. You will be able to find it, but I'm telling you summary here. See where yeah, so somewhere you will be able to find it here, so you can read it. I'm telling you summaries and all, so in one point you will be able to find it. In case if unregistered persons are making supply of goods through e-commerce operator, then also e-commerce operator cannot collect TCS. Then also they will not collect the TCS, but they have to follow one special procedure. There will be something called special procedure. A special procedure will be there. See this. See here. Unregistered persons may supply goods through e-commerce operators subject to specified conditions, provided they declare their PAN and principal place of business to verify from PAN that their turnover is below the threshold limit. And C. Details of the supplies made by unregistered persons through PAN shall be reported by the e-commerce operator in GSTR 8. All this you keep it aside. See here. No tax or TCS being payable or collectible until applicable threshold limit is crossed. So even unregistered persons can also make supply of the goods or services through the e-commerce operator, but TCS will not be collected unless and until they are liable for registration. Sir, can a composition dealer make supply of goods or services through e-commerce operator? Can a composition dealer make supply of goods or services through e-commerce operator? Yes, but not services. Services he can't do. If you remember, once again, composition chapter I have done the revision. No, just go back and revisit that composition chapter, composition levy revision. In that I told one of the restriction, if you want to opt for composition levy, one of the restriction is you can't make the supply of services through the e-commerce operator. Yes, they say it. In case if you want to avail composition levy, you can't. One of the restriction is you can't make the supply of services through the e-commerce operator. So in case if you are making services through e-commerce operator who is required to collect TCS under section number 52, that also they say. So in case if you want to make the supply of services through the e-commerce operator who is required to collect TCS under section number 52, then you can't avail composition levy. Okay, so that means if you combine both the provisions, if you are staying under composition levy, you can only make supply of the goods through the e-commerce operator who is required to collect TCS under section number 52. Yes, you can do. So if you are a composition dealer, yes, you can make the supply of the goods through the e-commerce operator required to collect TCS under section number 52. In that case, will TCS be collected, sir? Yes. If the supplier is a registered person, and even if he is a composition dealer, if he is making supply through the e-commerce operator who is required to collect TCS under section number 52, still TCS will be collected. Okay, still TCS will be collected. So these are all the various circumstances where there will be TCS, where there will not be no TCS and all. So all that we have covered. Then some procedural formalities. If you are a e-commerce operator, you will be required to file one return. GSTR 8 you will be required to file. So, and what is the due date? Same like 10th. It will be Right, see here. So you'll be required to file one return. Which return you are required to file? GSTR 8 you are required to file, which will be a monthly electronic statement. There are various details which you are required to submit. In your GSTR 8, there are multiple details which you are required to submit. There will be so many tables in that GSTR 8. All the tables you have to fill it. Sir, what is the due date? 10th day of the month succeeding the calendar month. Same like TDS only, by 10th of the succeeding month, and also the TCS amount is also required to be deposited on the same day, and that TCS amount will be made available to the recipient, made available to that supplier. He can claim it through his electronic cash ledger. That's all usual things are same. This is one important, this is one latest amendment here. F point, sir, what is it? Whether nil NTR, whether nil GSTR 8 needs to be filed in case if there is no TCS liability in a tax period. See, generally in GST returns we have one concept. You are required to file returns even if you did not make any supplies, even if you did not have any transactions to report, still you will be liable to file something called nil return. No, if you take GSTR 1. So generally you have to declare all your statement of outward supplies, credit notes and all in your GSTR 1. Even though if you don't have any outward supply, still you will be liable to file nil GSTR 1. Same thing with GSTR 3B. If you are a registered person, you are required to file GSTR 3B. Even if you don't have any outward supply, any liability to discharge, no ITC to claim, still you are required to file nil GSTR 3B. So like that also is the e-commerce operator. If he is having any TCS to be collected, he will file GSTR 8. If there is nothing required to be collected, still is he required to file nil GSTR 8? No, this has been relaxed. See here. Filing of GSTR 8 is required only when an e-commerce operator has collected TCS, needs to amend earlier details, or has populated entries in table 4. And it is not mandatory, very important. It is not mandatory for a tax period with no TCS liability, no auto-populated details or rejected entries. That means in one particular month, you are such an e-commerce operator, you don't have any TCS to be collected. You are not required to collect any TCS amount. Number 2, no table. You don't have any entry required to be made in your any of these tables. In GSTR 8, many details you are required to fill. You don't have anything to be reported in any of the table. Not that you are not required to collect any TCS. You are not having anything to report in any of these tables. Then you need not file the GSTR 8 only. Even nil also you are not required to file. This is one special case which is applicable only for GSTR 8. In all other returns, if you are liable to file a return, even if you don't have anything to report, still you are required to file nil. Even for GSTR 7 also nil is applicable. But when it comes to GSTR 8, if you don't have anything to report in your GSTR 8, even nil you need not file. Even nil return also you are not required to file. Clear? So this is one special case which is applicable for GSTR 8. So that's all, guys. These are important points from e-commerce operator point of view. So we have covered 2 sections. 51 we have covered, TDS 51 TDS we have covered, 52 TCS we have covered. Along with that, in the tax invoice, some important provisions also we have covered. Right. So now one more thing I would like to say here. See, payment of taxes. Whatever TDS concept we have covered, no, that TDS concept has actually been a part of payment of taxes only. That TDS concept is actually the part of payment of taxes only. Now in the payment of taxes, I want to explain one important point, not entire chapter. See, this payment of taxes, so many things you will be able to find, like what is electronic credit ledger, what is electronic cash ledger, what is electronic liability ledger, how you have to deposit the money, how you have to deposit the money and all, how you can create the challenge. So like that, many details you will be able to find it in this chapter. All that is not important from the examination perspective. Only one thing which will be tested at the CA final level is, how to calculate the interest. How to calculate the interest. This is very important. Calculation of interest is very important. So this I will give you brief how to calculate the interest and all. This will try to understand it. Fine. See, interest liability will arise in 2 circumstances. Interest liability, you become liable to pay the interest in 2 circumstances. What are they? Number 1, you are making the delayed payment of tax. You are making delayed payment of tax. You are required to make some payment of tax, but you are making a delayed payment. Another case where you will be liable to make the payment of interest is ITC wrongly availed and utilized. ITC wrongly availed and utilized. First case, interest is very easy. In second case, there are some complications which you have to keep in mind. Listen carefully. Interest is very important at the final level, often tested. Listen carefully. So interest, the liability to pay interest can happen in 2 circumstances. One is you are required to make the payment of interest, but you are not making the payment of, but you are required to make the payment of tax, but you are not making the payment of tax. Number 2, you are claiming the ITC wrongly and also utilizing it. Then also interest will become applicable. First, we will talk about delayed payment of tax. In case if you are making delayed payment of tax, how much interest you will be liable to pay? Listen carefully. Delayed payment of tax. So here they say two cases. Let us say, for example, you are filing the return only late. You are filing return itself late. Let us say, this I will try to give you examples. Here we'll spend some time. April 2025 year. For this month, you have made some supplies. So you have a output tax liability amounting to 10 lakh rupees. You have output tax liability amounting to 10 lakh rupees. You also have input tax credit. The balance in the electronic credit ledger, you have 8 lakh rupees of input tax credit also. Now what you should do, you have to file the return. What is the due date? 20th of May 2025. There could be multiple things which could be happening. Let us say you are filing your return. And you are declaring that outward tax liability is 10 lakh rupees, 8 lakh rupees is input tax credit, balance 2 lakh rupees, cash payment also you are doing. You have made the payment in cash also. Will there be any interest? No interest. You are a good fellow. You are a good person. So you have filed your return and you have declared your output tax liability. You have paid your taxes also. You claim that this much ITC I have, and balance amount you have paid it in cash. So will there be any interest here? No. You are a good person. Let us say on 20th of May 2025, you did not file the return. You did not file the return only. You filed your return on, let us say, on 10th of June. On 10th of June 2025, you filed your return and you made the payment. So you filed the return only late, no? So now you will be liable to pay interest. So now on 10th of June 2025, you are saying 10 lakh rupees is my output tax liability, 8 lakh rupees is my ITC, then 2 lakh rupees you are paying through electronic cash ledger. Now you are liable to pay interest, but interest on what amount? Are you liable to pay the interest on your gross liability, or are you liable to pay interest only on the amount which you are discharging using your electronic cash ledger? So in this case, are you liable to pay interest on gross liability, or will you be liable to pay interest only on the amount which is discharged using the electronic cash ledger? You will be liable to pay interest only on amount discharged through your electronic cash ledger. Okay, so you will be liable to pay interest only on this 2 lakh rupees. So 2 lakh rupees into 18% from the due date of making payment. So ignore 20. So starting from 21, you are supposed to pay this amount on 20, but you are paying it on 10th. So how many days? So take out 20, 21 to 31, 10 days. 21 to 31. So you have 11 days. Thereafter in this month, June, 10 days. So total for 21 days, you will be liable to calculate the interest and pay that amount. You have to calculate interest for that 21 days and you have to pay that amount. Clear? Next. Now you are smart. You are becoming over smart. Listen, third case, what will happen? So you are actually liable to file the return on 20th of May 2025. On this date, you are required to file your return. But you are smart. So what you are doing is you are filing your return. But in your return, you are declaring your outward supplies as your output tax liability. You are under reporting. You are filing your return, but you don't have this 2 lakh rupees of cash to make the payment. So what you are doing, you are filing the return, 8 lakh rupees worth of output tax liability only you are declaring, and 8 lakh rupees you are using electronic credit ledger. Nothing you are paying it now. So then what you did, so return has been filed. Next month you will file return. You are behaving over smart here. So what you are doing is by 20th of May, you are filing your return. But you are declaring under liability because you don't have cash to pay. So what you are doing, you are filing your return and you are declaring your outward tax liability is only 8 lakh rupees, and 8 lakh rupees you are using your electronic credit ledger. But what you are doing is next month return will be there, no? For May month, you will file the return in June, no? So on 20th of June, what you are doing is for this June month liability you are declaring. June month's liability and all you are declaring. But what you are doing is whatever liability, so what has actually happened here is, that in the May month, in May 25, on 20th of May when you are filing return, that next month you will get the credit. So that's why you are declaring under liability here. Let us say, for example, for May month liability is 5 lakh rupees. You have enough of input tax credit. You discharge that May month liability. But in this return, what you are doing is now you are voluntarily coming forward and saying, boss, in April month, I did not declare 2 lakhs worth of output tax liability. But now in this month I have output, in this month I have credit that I will use it to discharge my April month liability. So you are behaving over smart here. So you are saying in May month you are filing your return. For May month you are filing your return. So May month liability actually you have disclosed. But now you are saying, sir, in April month my actual tax liability was 10. but I underreported it. Now I am declaring my that 2 lakh rupees of extra liability also related to April month. The balance, I have enough of input tax credit that I will use it, that I will adjust it for my payment, so that I need not pay any interest because I have discharged all my liability using electronic credit ledger only. I did not make use of any of the electronic cash ledger. So he tried to become over smart. Now what department said, don't do over smart, don't be over smart here. So in case if you have already filed your return, but in that return you did not declare your liability and make the payment of tax, later you are declaring it, in that case on the total liability you will be liable to pay the amount of interest. On the entire 2 lakh rupees you will be liable to pay interest, even though you are discharging using electronic credit ledger. So on the entire 2 lakh rupees you will be liable to pay interest for 18% for 1 month. So actual due date is 20th, but the due date is, but you are paying it on 20th of June 2025. So here also total for 31 days you will be liable to pay interest on total 2 lakh rupees. So don't behave over smart here. Understood? Clear? So what I wanted to say here is, in case return, it's simply remember like this: in case return itself is filed late, in case return itself is filed late, return only you are filing it late, no worries, you are liable to pay interest on only that component of that tax which you are discharging it using your electronic cash ledger. But in all other cases, that means you have filed the return, but later you are making that delayed payment. In that case, you will be liable to pay the interest on the gross liability, whatever you are liable to pay, not just on the amount which you are discharging it through electronic cash ledger. Will you be able to remember this? Will you be able to remember this? No. So one more point they have told. See here also, if you take the second case, if you take this second case, specifically the second case, you come here, sir, I did not file the return only. I am filing it on 10th of June 2025. 10 lakh rupees is my output tax liability. 8 lakh rupees I have it in my electronic credit ledger. 2 lakhs I am paying it now using electronic cash ledger. I am discharging my electronic cash ledger now. Sir, but in my electronic cash ledger, there is already balance. In my electronic cash ledger, there is a balance lying in my electronic cash ledger amounting to 1 lakh rupees. Amount is lying in my electronic cash ledger from the due date of payment till the date of actual adjustment. So starting from 20th only, starting from 20th of May, from 20th of May 2025 itself, in my electronic cash ledger already 1 lakh balance is there. And that balance I have maintained it till the date of this actual adjustment. When? Till 10th of June 2025, 1 lakh rupees is still lying in my electronic cash ledger, sir. I did not use it. I did not use it. So 1 lakh rupees of balance is there in my electronic cash ledger, even though I am not using it, even though I did not discharge my liability. On the due date, I already have 1 lakh rupees of balance in my electronic cash ledger, and that balance I have maintained it till the date of that actual adjustment. So now what they have told is they are giving one more relaxation. How much amount you are now discharging through electronic cash ledger? 2 lakh rupees, no? How much amount of balance is lying already in your electronic cash ledger from the due date till the date of actual adjustment? 1 lakh rupees. Now you pay interest only on 1 lakh rupees. One more relaxation they are giving. You pay the interest only on that 1 lakh rupees extra. Why? Because the amount is already lying in the electronic cash ledger. No, we already have your money. You don't have that excess 1 lakh rupees here. So that's why you have waited. But that 1 lakh rupees you have deposited in your electronic cash ledger. When you have deposited that money in electronic cash ledger, that amount is already with the GST department. So that's why what they have told. One more advantage we are giving you. What is that one more advantage? So from that 2 lakh rupees, whatever you are discharging through your electronic cash ledger, take out the amount which is already lying in your electronic cash ledger from the date of payment, from the due date of payment till the actual adjustment. If that amount is maintained in electronic cash ledger and it is maintained as it is without using, then in that case reduce that excess 1 lakh rupees also, and you will be liable to pay interest only at the rate of on the balance amount which you are discharging it through electronic cash ledger. Understood? Clear and comfortable, everybody? Right. So this is what you need to keep in mind. So I tried to give you one simple comprehensive example to make you understand this interest payment. I hope you are all able to understand. Okay, right. Next, let us come to the next point. So one case we have covered, how you will calculate interest in case of delayed payment of tax. Now we will do one more thing here. How you will calculate interest in case of ITC wrongly availed and utilized. In case ITC is wrongly availed and utilized, how to calculate that interest component? Let us see that. Sir, let us say April month 2025. For April month, while I am filing my GSTR 3B on 20th of May 2025, while I am filing my GSTR 3B, I have taken ITC. I have taken ITC, input tax credit. I have wrongly availed. How much, sir? 2 lakh rupees of ITC wrongly availed. That amount was credited to my electronic credit ledger, and that I have used it also, sir. I have taken 2 lakh rupees of ITC which is wrongly availed, and I have used it. And I have used it for discharging my output tax liability. So 0. I have taken ITC and have used it, availed and utilized it for discharging my output tax liability. But I have wrongly availed, sir. I am not eligible. Let us say that is a blocked credit. I purchased a motor vehicle. On that I have paid 2 lakhs worth of GST. So it is a blocked credit under 17 subsection 5. So if it is blocked credit under 17 subsection 5, I should not avail it. But I have availed it, sir. I should not have availed it, but I have availed it, sir. What I should do now? So what you should do now, in case if you have already availed the input tax credit, which you should not have availed it, then what should happen is, you should reverse it whenever you find it out. You should reverse it. Let us say, for example, sir, I found it out. I'm ineligible for credit in the August month. So in the August month, when I'm filing the return, but is by 20th of September, when I'm filing the August month return, what I'm doing is, whatever ITC I have wrongly availed, that I'm reversing it, sir. That I'm reversing it. I'm giving it back. So now if you just reverse it, it alone will not be enough. On that ITC which you have wrongly availed and utilized, on that 2 lakh rupees, you will be liable to pay interest also. From which date, sir? From the date of utilization. From the date of utilization till the date of that reversal. Sir, when I have utilized it, on 20th of May, I have utilized it. So from the date of utilization till the date of reversal, when you are reversing it, on 20th of September, you are reversing it. So from the date of utilization till the date of reversal, you have to calculate the days, and for that days, you have to pay the interest at the rate of 18% per annum. You have to calculate it at the rate of interest at the rate of 18% per annum. So in case if you have wrongly availed ITC and you have utilized it, later on you are reversing it, you are liable to pay the interest from the date of utilization till the date of reversal, interest at the rate of 18%. But here, some special points I will try to tell you here. Let us say in the April month 2025, you have filed your GSTR 3B, 20th of May 2025, you filed your GSTR 3B. Now let me tell you, electronic credit ledger. See, there is already balance lying in your electronic credit ledger. 2 lakh rupees of balance is already there. Now in your GSTR 3B, let me take another amount. In your electronic credit ledger, already 10 lakhs worth of ITC balance is there. Now in this GSTR 3B for the month of April, you are wrongly availing 2 lakh rupees of ITC. You are wrongly availing 2 lakh rupees of ITC. Okay, plus 2 lakh rupees of wrongly availed ITC you have done. Thereafter, you have utilized it. Now for this month, output tax liability will be there, no? So you have utilized, let us say for example, 8 lakh rupees of ITC you have utilized. Thereafter, still 4 lakh rupees of balance is there in your electronic credit ledger. 4 lakh rupees of balance is there still in your electronic credit ledger. So in one particular month, you have availed 2 lakh rupees of ITC. You have taken the credit, but already enough of balance is there in your electronic credit ledger. To that, it was added. But out of that amount you have utilized, let us say in the current month you have 8 lakh rupees of output tax liability, you have adjusted it. Still in your electronic credit ledger 4 lakh rupees of balance is there. Okay, so now this fact you have realized that you have wrongly availed ITC. Now you want to reverse it. On 20th of September 2025, in your GSTR 3B, you want to reverse that ITC. You want to reverse that ITC. Will any interest will become applicable? Here interest will not become applicable. Here interest will not become applicable. Sir, why interest will not become applicable? Why? Because if you read the provisions of section 50, they say that interest is liable to be paid only when the ITC is wrongly availed and also utilized. ITC is required to be reversed only when ITC is wrongly availed and also utilized. Here ITC is wrongly availed. There is no doubt. ITC is wrongly availed. 100% ITC is wrongly availed, but it is not utilized. Sir, when we can say ITC is utilized, ITC will be considered as utilized only when the balance in the electronic credit ledger has fallen below the wrongly availed ITC amount. Listen carefully. Pay attention to the words I am using here. As it is words you have to write in your exam. So interest will be payable only when ITC is wrongly availed and also utilized. ITC should be wrongly availed and also utilized. Then only interest is applicable. But in this case, you have only availed ITC, but you have not utilized it. You did not use it for discharging your output tax liability. If ITC is wrongly availed but not utilized, interest is not payable. Sir, when ITC will be considered to have been utilized? ITC wrongly availed, okay. But when wrongly availed ITC will be considered to be utilized? ITC will be considered to be utilized. ITC wrongly availed will be considered to be utilized only when the balance in the electronic credit ledger has fallen below the wrongly availed amount. Sir, from the date of availment till the date of reversal, I have availed it on 20th of May. I'm reversing it on 20th of September. But starting from 20th of May till 20th of September, if my electronic credit ledger balance is always above 2 lakh rupees, starting from 20th of May till 20th of September, from the date of availment till the date of reversal, if the balance in my electronic credit ledger is always above the wrongly availed amount, how much I have wrongly availed? 2 lakh rupees. But starting from 20th of May till 20th of September, if the balance in my electronic credit ledger is always above 2 lakh rupees, no interest will be applicable. No interest will be applicable. Sir, let us say I have availed 2 lakh rupees. When I have availed it, wrongly availed on 20th of May 2025. But on that day, my electronic credit ledger, that means after adjusting all my liabilities and all, my electronic credit ledger balance is 1 lakh rupees only, sir. My electronic credit ledger balance is 1 lakh rupees only, sir. This 1 lakh rupees balance I am maintaining. But on 20th of September 2025, I realized my mistake. I want to reverse it, sir. Now, how much you will reverse? 2 lakhs you will reverse. But here reversal alone will not be enough. Interest is also you have to pay. Why, sir? You have wrongly availed ITC and you have utilized also. Why you have utilized? Your balance in the electronic credit ledger has fallen below the wrongly availed amount. How much you have wrongly availed? 2 lakh rupees. How much is the balance in the electronic credit ledger? 1 lakh rupees. So you have wrongly utilized also. Sir, what is the extent of utilization? 1 lakh you have wrongly utilized. Interest you will be payable on what amount, sir? 1 lakh rupees. On 1 lakh rupees, 18% from the date of utilization till the date of reversal divided by 365. That much amount of interest you will be liable to pay. Understood? Clear, everyone? Able to understand? Right. So this is what you have to remember. 2 points in case of ITC wrongly availed and utilized. Sir, what are the points which you have to keep in mind? Number one, interest will become applicable only when the ITC is wrongly availed also, utilized also. Sir, when ITC will be considered to have been wrongly utilized? When the balance in the electronic credit ledger falls below the wrongly availed amount. Sir, what is extent of utilization? The difference to whatever amount, to the extent of whatever amount the balance in the electronic credit ledger has fallen below wrongly availed ITC, that will be considered as the amount of utilization, and on that amount only interest will become applicable. Understood? So all these things I have tried to cover it in this example. And one more important circular I will try to say it here. Let us say you have different heads: IGST, CGST, SGST. Let us say you have wrongly availed IGST amount. You have wrongly availed IGST. You have wrongly availed IGST amounting to 1 lakh rupees. This is the wrongly availed amount. Now, the balance in the electronic credit ledger, under all the three heads: IGST, CGST, SGST. I don't have any balance in my electronic credit ledger. Under CGST, I have 70,000 rupees of credit. Under SGST, I have 70,000 rupees of ITC. So now you tell me I have wrongly availed IGST amounting to 1 lakh rupees. But the balance in the electronic credit ledger under IGST heading has fallen below my wrongly availed amount. How much I have wrongly availed? 1 lakh rupees of IGST. What is the balance in the electronic credit ledger under IGST heading? 0. That means I have wrongly availed and utilized IGST amounting to 1 lakh rupees, and I am liable to pay interest when on its reversal. Whenever I am reversing it, I will be liable to pay interest. It will not be enough just if I reverse it. I will be liable to pay interest also at the rate of 18%. No, not required. Because what they are trying to say is, when you are considering whether balance in the electronic credit ledger has fallen below the wrongly availed amount or not, especially for IGST purposes, don't just consider balance in the electronic credit ledger under IGST heading. Consider the balance in the electronic credit ledger under all the headings: IGST, CGST, SGST. So what is the cumulative balance in my electronic credit ledger? 1,40,000, which is higher than the amount I have wrongly availed. So ITC will not be considered to have been wrongly utilized. So here IGST has been wrongly availed but not utilized. So when I am reversing this 1 lakh rupees later, will I be liable to pay interest? No, I will not be liable to pay interest. Able to understand? So now if I bring this logic into next concept, when you are considering whether CGST has been wrongly utilized or not, then you have to consider balance in the electronic credit ledger under both CGST and IGST put together. That collective balance you have to consider. Check whether that balance in the electronic credit ledger under CGST and IGST has fallen below the amount of CGST wrongly availed. When you are considering SGST, check whether the balance in the electronic credit ledger under SGST and IGST has fallen below the amount of wrongly availed SGST. We can interpret that circular further. Circular only spoke about this aspect here. First aspect, I am considering the consequences on CGST, SGST also. So till here you remember it. So what they are saying, when you are checking whether IGST has been wrongly utilized or not, you should compare the balance in the electronic credit ledger under all the three heads. You have to compare what is the balance in the electronic credit ledger under IGST, CGST, SGST all put together. What is the balance in the electronic credit ledger in total, whether that has fallen below the wrongly availed IGST amount. If it has fallen below the wrongly availed IGST amount, then it will be considered to be utilized. What is the extent of utilization? The difference, whatever is there, that will be extent of utilization. On that, you will be liable to pay interest at the rate of 18% from the date of utilization till the date of reversal. Clear? Understood? So this is what one of the important concept, how to calculate the interest. Expect a question from this. Expect a question from this. Right. So this is what regarding this thing. Payment of taxes, TDS and TCS. Now I will try to cover one more small chapter. I will try to cover one more small chapter. So what we'll try to do is assessment and audit we'll try to do. One small chapter is there, assessment and audit, that we'll try to do. Hardly it will take some 20 to 30 minutes. We'll try to complete that. Where is it, man? Chapter number, I think 17 or something, not 17, 18. Yes, here we have. So assessment and audit. So one more small chapter is there. This I will try to do. Okay, right. After this, we'll wind up for today. We have some major chapters. Refunds we have. See, major chapters which I want to cover is refunds. Refunds, one thing I have to cover. And refunds I will do. Thereafter I will do appeals also I will do. Advance ruling and all this is miscellaneous concepts. So remaining chapters after this assessment and audit, what are the remaining chapters which I will revise is refunds. 100% I will do. Many of the students will have a confusion regarding refunds, so that refunds related revision I will do. But from tomorrow onwards I might not be doing the live. Today is the last live session for marathon series, but this is not the end. This is not the end. Even though live is ending, this is not the end. So even few more chapters I'm going to revise. So what are that few more chapters I'm going to revise? I'm going to revise refunds I will do the revision. Appeals also I will do the revision. Inspection, search and seizure, penalties, some important penalty provisions also I will revise. All these things also I will revise, but not through live. Not through live. On a daily basis you will find the revision videos of these chapters getting uploaded on the YouTube channel, so no need to worry. So from today live might be ending. Yes, live is going to end. Live might not be there, but those remaining chapters also will be uploaded as a recorded video. It will get uploaded. If at all I find any convenient time for live, I will do the live as well. I might not follow fixed times and all, but if at all I am able to do live of these chapters, I will schedule a live. Stay connected to my channel, so whenever I want to do the revision, I will schedule one live. If at all you want to participate in that live session, you can participate as well. Okay, right. Or else you will find the recordings on my channel. So please do exemptions chapter 2. I will try, because exemption is such a voluminous chapter. We'll see if the things permit me. Definitely I will do the exemptions chapter as well. See, but in the meantime, what you can do is, for CA Inter level, in the CA Inter revision series playlist, you will find one exemption related video, somewhere around some 1.5 hour. Some 1.5 hour of thing I have uploaded, 1 hour 40 minutes or something. I have done the revision of exemptions. There also I have done good coverage. So whatever are relevant for inter, see, exemptions are going to be common for inter and final as well. So that's why many exemptions, somewhere around 1 hour 45 minutes I have spent on revising the content for CA inter related exemptions and all. That video anyhow you will be able to find it in my channel, that you can refer it in the meantime. So remaining also I will try to do it. Remaining exemptions also will try to do it. Right. So anyhow, so let us try to continue further. Assessment and audit. So assessment and audit will try to do it. Sir, what are that? Assessment. See, assessment means what? Determination of the tax amount. What do you mean by assessment? Determination of tax amount. So how you will determine the tax amount? So what amount of GST you are liable to pay? That determination is necessary. Sir, how to determine it? How to determine the amount of GST which you will be liable to pay? So that process we call it as assessment, and we have different kinds of assessment. One of the most common assessment which will happen in GST is self-assessment. Sir, what is self-assessment? You yourself will calculate, you yourself will file your returns, you yourself will file your GSTR1, you yourself will file your GSTR3B, you yourself are going to calculate what is the amount which you will be required to pay, and you will declare in your returns. That is major thing which we all will do. So one thing is, one of the most common assessment which everybody will do is self-assessment. That means you will calculate your liability on your own. You will declare what ITC you are eligible for, how much amount you are required to pay it in cash, so that cash deposit, electronic cash ledger adjustments. So that is one thing. Mostly this is what many people will try to do. Okay, self-assessment. 99% of the cases this will happen. But in some cases what will happen is there will be something called scrutiny assessment. One of the most common assessment is self-assessment, section number 59. But in some cases what will happen is something called scrutiny assessment will happen. Sir, what is this scrutiny assessment? Scrutiny assessment means you will file your returns. On self-assessment basis, you will file your returns, but that returns will be taken up for scrutiny by the proper officer. Proper officer will take up that returns for scrutiny. He will determine whether have you made correct declaration of your liabilities and all. On risk parameters, how this scrutiny assessment will happen is, on the basis of risk parameters, this your returns will be taken up for scrutiny. That means proper officer will check whatever data you have submitted, it is correct or not. In case if he finds that, so let us try to cover what will happen in the scrutiny return as per section number 61. So what is the scrutiny return? Verifying the correctness of the return. Whatever return you have submitted, whether that return is correct or not, that will be verified. So once you have filed your return will be selected. Not that each and every return will be selected for scrutiny by the proper officer. Don't be of a wrong notion that each and every return filed by the taxpayer will be taken up for scrutiny. No, department doesn't have that many resources. Department doesn't have that many officers. Department doesn't have that many resources to complete it. That much time also is not available. So on the basis of some risk parameters, returns, a few returns filed by the taxpayers will be selected for scrutiny. Scrutiny by the proper officer will happen. Then on such a scrutiny, if any notice is found, you filed one return, but that return was taken up for scrutiny. Now in that on scrutiny, if you are able to find any discrepancy, if the PO finds any discrepancy, he will first issue a show cause notice. He will first issue a show cause notice. If any discrepancy is found during scrutiny, he will issue a show cause notice asking for explanation within a time not exceeding 30 days. So once he has given you show cause notice, he will give you 30 days of time. How much? 30 days of time. 2 days ago only I got this assessment is very relevant for me. Why? Because 2 days ago only one of my client has not filed has filed his GSTRs, but according to this on the basis of risk parameters, 2B 3B comparison happened. When compared with the 2B, my client has taken more in ITC in GSTR 3B. When compared with the 2B, one of my client has taken more ITC in his GSTR 3B, so that returns were taken up for scrutiny. Now he got that notice asking him to explain somewhere around 15 lakhs amount of GST has excess claimed. That was taken up by scrutiny. That return was filed, that return was taken up for scrutiny, and he has given one notice, which is what currently I am dealing with. Just for information sake, I am saying it here. So if any discrepancy is found during scrutiny, he will issue notice, and to that notice you have to respond within 30 days. He will give you 30 days of time. Within that 30 days of time, you have to respond. And where possible, quantifying the tax, interest and other amounts also payable. In that notice, he will also mention this much amount of tax you are required to pay, this much interest you are required to pay, and other amount like penalty if any is there, that also he will mention how much amount you will be liable to pay. Reply to such notice. You have to reply back to that notice. So within 30 days of time, you are liable to reply back to that notice. And in that, how you have to reply back? What could be possible actions from your side? Either you will accept the discrepancy. As mentioned in the notice and pay the amount. Okay, you are accepting. Okay, sir, my fault only. I will accept the discrepancy and I will pay the interest, late fee, penalty, whatever it is, I will pay. Or if you find that no, that is not a discrepancy, you are a genuine person only, you have a valid reason why you have made that differences and all, you have to furnish an explanation. So whatever it is, you are required to do it within 30 days. Either accept the discrepancy, pay the amount, pay the amount of tax, interest or other amount, or furnish an explanation for discrepancy to the PO for non-acceptance of discrepancy. Now, action by the proper officer. See, in case if you have accepted, paid the amount, interest, penalty, well and good, the matter will get settled there. In case if the explanation or information furnished by the registered persons is found acceptable, if it is acceptable, PO will accept your reply and he will drop the proceedings. In case if you are not giving any satisfactory explanation, either you are not giving explanation within 30 days or you are giving explanation but that is not satisfactory, then what you should do? Or you are not taking any corrective action, then PO can take any of the actions. Sir, what actions he can take? Either you are not responding or you are responding also, but it is not a satisfactory reply. In all that cases, what will happen is he will proceed to conduct audit under section number 65. he will order for audit under section number 65. Departmental audit he can order, or he can order a special audit. Or what he can do, he can even order a special audit by chart accountant or cost accountant. Or even he can do inspection, search and seizure also he can do. Under section number 67, he can order for inspection, search and seizure. Or he can initiate proceedings for determination of tax and other dues under 73, 74, 74A. He can initiate proceedings, demand and recovery proceedings he can initiate under section 73, 74 or 74A. Able to understand? Clear and comfortable? So this is what regarding summary written. This is what regarding scrutiny written. Now there will be something called provisional assessment. So two assessments we have covered. One is self-assessment, other one is scrutiny assessment. Now the third one is provisional assessment. There will be something called provisional assessment. Sir, what is this provisional assessment? Very simple. In case if you are a taxable person, you are facing some problem. You are unable to determine what is the value. On what value you are liable to pay the amount of GST, that you are unable to determine it. Or you are unable to determine the rate of tax which is applicable on your goods. There is some confusion here, quite common. As a part of business, sometimes we might not know how to determine value. Or you are selling some unique product which is not there in the HSN list. You are confused what will be the rate of GST that is applicable on the goods or services whatever you are providing. So where a taxable person is unable to determine value or is unable to determine the rate which is applicable on the goods or services, then you have to furnish an application in the prescribed form. You can make an application to the proper officer. Sir, I am unable to determine the value. I am unable to determine the rate. Please help me. I will make the payment of duty on provisional basis. You tell me some provisional basis. On that provisional basis, I will pay the duty. Sorry, I will pay the GST on the provisional basis. Later, you finalize. Later, you take your time and finalize what should be the appropriate value. You finalize what should be the appropriate rate. Then I will discharge my final liability. So like that you can make an application. So when you are unable to determine the value, when you are unable to determine the rate, furnish an application along with reasons and you ask for provisional payment of tax. Sir, tell me some means where provisionally you tell me this value, provisionally you tell me this much rate, and provisionally I will pay. And you take your time and decide what is the value, what is the rate, and upon finalization, we will see what will be the outcome. Right. So you can make reasons, you can make a request for provisional payment of duty along with submission of supporting documents. Okay, you submitted application. Now what PO will do on receipt of that application? PO will issue a notice in the prescribed form. So first you make an application for provisional assessment, then he will give notice. If he needs some extra information, he will give you notice seeking extra information if necessary. So PO will issue a notice in the prescribed form seeking additional information as to which registered person shall file reply and may appear in person. So before doing that provisional assessment, he will issue notice, and if at all you want, even you can go and appear before him. Then PO will issue an order within a period not later than 90 days. You submitted the application, no? Within 90 days from the date of that application, he will tell you provisional assessment order. So from the date of receipt of such request, allowing payment of tax on provisional basis. So you made an application, PO will take 90 days of time. Within that 90 days of time, he will tell you provisional assessment, not final assessment. Okay, provisionally on this value, you pay the GST. Provisionally, this much amount of rate of GST you pay. Like that, provisional assessment order will be given within 90 days from the date of receipt of application. Indicating what will be the value, indicating what will be the amount which you are required to pay. And also, he might ask you to furnish some security also. Which cannot exceed 25% of the amount covered under the bond. So that means he will ask you to execute the bond, and in some cases bond alone will not be enough. He might even ask you to furnish security up to 25% of the bond amount also. So whatever it is, he will give you provisional assessment order. Okay, and accordingly you have to furnish the bond and security also, that you can read it. Now finalization should happen. Boss, within 90 days whatever order you have got, that is provisional order only. Now final assessment order should come. Finally, after the provisional assessment order, the PO will sit, he will analyze what should be your correct value, what should be your correct rate. That final assessment should happen. Sir, what is the time limit for that final assessment, sir? Let us see. So final assessment order has to be passed within how many months? Within 6 months. From the date of communication of provisional assessment. Within 90 days you gave the provisional assessment order? No. From that provisional assessment order, within 6 months, final assessment order should be passed. However, if it can be on valid reason, that period can be extended by 6 months. So PO on his own, he will have 6 months of time to finalize the assessment. If there is a valid reason, that can be extended by joint or additional commissioner by 6 more months. Not just that, the commissioner for such period as he may deem fit, not exceeding 4 years. If there is a valid reason, commissioner can extend it for 4 years. That means altogether you will have 5 years for doing the final assessment. From the date of provisional assessment till the time you do final assessment, you have maximum of 5 years of time. 6 months without any extension. If there is a valid reason, AC, JC can give extension for 6 more months. If there is a valid reason, commissioner can give extension for 4 years. So like that, maximum you have 5 years of time to finalize a final assessment order. Then, so once assessment has been completed, now here comes the part where on finalization of assessment, PO will issue a notice in the prescribed form seeking required information and pass a final assessment order. So final assessment order will come. Now in the final assessment order, 2 outcomes could be there. Let us say in the final assessment order, you are liable to pay extra amount. Provisionally, let us say you are paying only 12% of GST. But in the final assessment order, they have told that you are liable to pay 18% of GST. But till now, on provisional basis, you paid only 12% of GST. No? Now the balance amount you will be liable to pay. Whatever shortfall is there, now you have to pay that. So where tax liability as per the final assessment is higher than the provisional assessment, then you will be liable to pay the differential tax amount, not just paying differential tax amount, even interest also you are required to pay. Interest also you are required to pay. So provisionally you paid only 12%. Now the rate is determined in the final assessment order, they told 18%. The differential amount of tax you are liable to pay along with interest. Interest also you are required to pay. From the due date till the date of payment, you are liable to pay interest. Sir, what if in the final assessment order only the amount is less? As per the final assessment order, they told you are required to pay 5% only. But provisionally they asked you to pay 12%. Sir, what I should do? You can claim the refund. What you can do? You can claim the refund. So registered person shall be paid interest. Sorry, with the tax liability as per the final assessment is less than provisional assessment. That is, tax is becoming refundable. Can you claim the refund, sir? Yes. In case if the refund is not given to you within 60 days, then you will be liable to get the interest also. Anyhow, refund interest and all we will see in the refunds chapter. So what will be the rate of interest on refund, from which date to which date it will be calculated, that we'll see it in the refunds chapter. But here you have to remember, in case because of final assessment order, whatever amount you are already paid under provisional assessment is higher, then that excess amount you can claim it as refund. And you have to make a refund application. If the refund is granted within 60 days, no interest, nothing. In case if you made an application for refund, but if the refund is not granted within 60 days from the date of application of refund claim, then they will refund you along with interest from 61st day. Not from the date of payment. You have to make an application. Within 60 days, they will give you refund. In case if within 60 days, if you are giving refund, no interest. Within 60 days, if they are not giving you refund, from the 61st day till the date of refund, they will pay you interest. So don't have extra hopes there. Right. Next. And even on completion of the final assessment, whatever security you have furnished, that also will be released. Clear? So this is what regarding provisional assessment. So one is self-assessment, scrutiny assessment, provisional assessment. Then we have finally something called summary assessment. Summary assessment also will be there. Sir, what is summary assessment? Summary assessment is something which will be done in extreme circumstances. Summary assessment is something which will be done in extreme circumstances. Sir, what are that extreme circumstances? So what are that extreme circumstances is, let us say you are already a registered person. See, in normal assessments, what will happen? First, they will give you notice. After that notice, you have to furnish reply. Thereafter, order will come. Usually, how assessments will happen here? GST assessment. First, they will give you show cause notice. For that show cause notice, they will give you time for reply. Now, within that reply, you will take reply. Within that time, you will give reply. After that reply, let us say scrutiny assessment only. If you take first, they will give you notice. 30 days of time they will give you. Then only you will reply. After that reply, if it is not satisfactory, then order will come. But there will be some extreme circumstances. Let us say there is a one person who has done a severe default. Now the department follows usual procedure. Okay, first notice, 30 days of time will be there. Then he will give reply. Thereafter order. But that person is trying to fly away from the country. There is no such time. If you give that much amount of time for that person, if you give notice, give him 30 days of time. Within that time, what will happen is he will leave the country. So there is a time gap here. You should not give extreme difficult scenario. If you give time here, it will be a loss of revenue for the government. It will be against the interest of the revenue of the government. So then what department can do is, in that extreme circumstances, they can do something called summary assessment. No notice, nothing, directly order they will give. That is what we call it as summary assessment. But summary assessment cannot be done always. Only in extreme circumstances they will do it. So like if you see, summary assessment can be initiated to protect the interest of the revenue with the previous permission of AC or GC. 100%. If you want to do summary assessment, you need prior approval of AC or GC. When they can do it, sir? If the proper officer has evidence that taxable person has incurred a liability. If the proper officer is having perfect evidence that, sir, this taxable person is having some liability, and PO has sufficient grounds to believe that Delaying in passing an assessment order may adversely affect interest on revenue, or PO is having sufficient cause. PO is convincing to the AC or JC that, sir, if we take some usual route, if we give him the notice, if you give him some time, he will fly away from the country, sir. It will be a difficult, once he leaves the country, it will be difficult for us to collect the revenue thereafter. So like that, if the PO is having evidence that the taxable person has incurred a liability, PO has sufficient cause to believe that delaying passing an assessment order may adversely affect the interest of the revenue, then he can go to ACJC, get the approval and get the summary assessment done. Okay, so with the withdrawal of the assessment order, so what will happen is, so all these things will happen, then summary order will be passed, summary assessment order will be passed. But this summary assessment order can be withdrawn. That summary assessment order can be withdrawn. Let us say, for example, PO has done the assessment and told one person is going to fly away from the country. So quickly he has done the assessment and he told that you are liable to pay 5 crore rupees of liability. Like that, he has given a summary assessment order. Now this order can be withdrawn. When, sir? When on an application filed by taxable person for withdrawal of the summary assessment order. Now that person is coming and saying, sir, you came for assessment. You did the assessment, okay. But 5 crores is too much, sir. 5 crores is too much. I will cooperate with you, sir. I will cooperate. I will not leave the country. Take my passport if you want. I will cooperate with you. Please drop this summary assessment and do the correct assessment. 5 crores is too much, sir. That much money only I did not make it. That much money only I did not make it. You are saying 5 crores? I don't have that much amount of money. I am requesting you. I will cooperate. Take my passport. I will not go anywhere. So please drop that summary assessment order and do the proper assessment, sir. This liability is too much. Like that, if the request is coming, then they can drop the summary assessment. And within 30 days from the date of receipt of order. So once that summary assessment order has been passed, within 30 days, the application can be filed by the taxpayer asking them to withdraw the summary assessment order. And on his own motion, that means additional or joint commissioner, without any application from the taxable person, they on their own motion also can withdraw the assessment order. When, sir? Where he finds that such order to be erroneous and may instead follow procedures laid down on the demand and recovery. 73, 74, 74A, demand and recovery procedures he can follow on his own action, even without an application. AC or JC can do it. And deem a taxable person in case of supply of the goods. Sir, in case of summary assessment. In case of summary assessment, if you are unable to find the person against whom this liability should be imposed, then what they can do, where taxable person is not ascertainable and liability relates to supply of the goods, person in charge of such goods shall be deemed to be the taxable person. Whoever is in charge of that goods, that person will be deemed to be the taxable person and he will be liable to assessment, payment of tax and all other amounts due. So in case of the taxable person, who is a taxable person, if it is not ascertainable and it is a case of supply of the goods, whoever is the in charge of that goods, that person will be deemed to be taxable person and all the liability will be imposed on him. Right. So this is what regarding this one. And thereafter we have something called best judgment assessment. And we have one more last assessment called best judgment assessment. Sir, what is that best judgment assessment? Very simple. Let us say you are a person required to file a return. So best judgment assessment under section number 62. You are a person required to file the return. You are not filing your return. You did not file your return within due date. So then what will happen is first department will give you notice. First department will give you notice. In GSTR 3A, they will give you notice. Boss, please file your return. And they will give you 15 days of time. If you are failing to furnish any monthly return or final return, then first they will give you notice. GSTR 3A notice they will give. Boss, please file the return within 15 days. Now they have given you notice, but still you are not filing your return within 15 days. Then what will happen, So first they will give you 15 days of time. If within the 15 days of time also, if you are not filing your return, then the department will proceed to assess your tax liability depending on the best of his judgment. He will do best judgment assessment depending on whatever information available with him. He will determine what is your tax liability and that much liability you will become liable to pay. So that is what I call it as best judgment assessment. Able to understand? So very simple. If you are already a registered person, you are required to file some returns, but you are not filing it, then first proper officer will issue notice. Boss, please file your return. 15 days of time he will give. If within 15 days also, if you are not filing your returns, he will do best judgment assessment he will do. So what is the time limit? Within what time limit he can complete that assessment? He can complete that assessment within 5 years. How much time he have here? Within 5 years from the due date of the returns, or within 5 years from the due date within due date under section 54 for furnishing the annual return. For that duration, due date for annual return will be there, generally 31st of December following the end of the financial year. Let us say you did not file your return for the month of April 2025. So now he will issue 3A and he will do best judgment assessment. And what is the time limit for doing that best judgment assessment 5 years from the due date of furnishing annual return for the relevant financial year. So this is the relevant financial year 25-26. What is the due date for furnishing annual return? 31st of December 2026. Now from 31st of December 2026, 5 years of time he can take to complete that best judgment assessment. Understood? Okay, so he will take his own sweet time and he will do the best judgment assessment. Now he will pass an order. Okay, depending on the information available with me, this is what your liability, this much you have to pay. But that best judgment assessment can be withdrawn. That best judgment assessment order can be withdrawn. Sir, when it can be withdrawn, sir? Just listen carefully. So when the best judgment assessment order can be withdrawn is, let us say best judgment assessment order has been passed. Now within 60 days, within 60 days of passing of that best judgment assessment order, if you file your returns, and you declare your liability, you declare your usual liability, you pay all the taxes, you pay all the interest, and you pay the usual late fee. You pay the usual late fee within 60 days of best judgment assessment order. If you are filing your returns, paying your taxes, interest, and usual late fee for filing of the return, whatever is applicable, if you are doing it within 60 days, then the best judgment assessment order will be withdrawn. Your liability will be considered as per the returns, whatever you have filed. Okay, so this is one case. That's what they try to say it here. So if the registered person furnishes a valid return for the default period within 60 days of service of a best judgment assessment order, such order shall be deemed to be withdrawn. But liability to pay interest under section 51 and late fee under section 47 shall continue. You have to pay tax, interest, late fee, all that you have to pay usually, but best judgment assessment order will be withdrawn. One more option they are giving you here. So they have given best judgment assessment order. Within 60 days, you file your return, pay the usual interest, pay the usual late fee. We will drop our best judgment assessment order. Sir, within 60 days, you did not do it. Best judgment assessment order came. 60 days of time they have given. You did not file your returns, sir. Still 60 more days of time they are giving. We'll give you 60 more days. In the next 60 days also, if you file your returns, if you pay the interest, if you pay the usual late fee along with additional late fee of 100 rupees per day. Additional late fee of 100 rupees per day starting from 61st day. Within next 60 days, if you are filing return and pay interest, taxes, usual late fee along with that 100 rupees per day additional fee if you pay. Next 60 days we will wait. So if you are doing that within 60 days along with the payment of that additional late fee of 100 rupees, then also we will drop our best judgment assessment. Consider your returns. Sir, if within that 60 days also I did not do it, thereafter I am filing my returns. No, your returns will not be considered. Best judgment assessment will be final. Best judgment assessment will be final. So first initial 60 days they are giving. Thereafter one more 60 days they are giving. If a valid return is not furnished within 60 days, it may be furnished within a further 60 days on payment of additional late fee of 100 per day beyond 60 days. And on such filing, the best judgment assessment order shall be deemed withdrawn while liability for interest under 51 and late fee will continue. So maximum 120 days of time they are giving. First 60 days, usual late fee. Next 60 days, additional late fee of 100 rupees per day. Okay, fine. Till that time, we will accept. We'll drop our best judgment assessment order. Consider your returns. But within 120 days also, you are not taking any action. Even after that, if you file the returns also, will not consider whatever liability we have determined. That will be final. That only you are liable to pay. Okay, right. So this is what regarding best judgment assessment. Thereafter, I will talk about audits. We have two kinds of audits actually. One is audit, departmental audit, where GST authorities itself will do the audit, or there is something called special audit, where if the department doesn't want to do the audit, they can appoint a chartered accountant or cost accountant to do the audit on behalf of the department. So like that, two audits can happen under GST. One is department by the tax authorities under section number 65. Sir, who will do this departmental audit, sir? So this audit can be undertaken by commissioner or any other officer authorized by him. And where it will be conducted, sir? At the place of business or office of the taxable person. Taxable person is there, no? To their office, GST officers will come, commissioner will come, his team will come, and they will come to the registered person's premises or their offices, and there they will do the audit for a financial year or part thereof or multiple financial years. Even they can do audit of the part of the year, they can do audit of the full financial year, or they can do audit of multiple financial years also. But they will give notice, 15 working days notice they will give. Before they come for audit, they will give you 15 working days of notice. And what is the time limit for completion of this audit, sir? When the departmental people have come for audit, what is the time limit for completion? 3 months. 3 months from the date of commencement of audit, that audit has to be completed. Sir, what do you mean by commencement? So they are saying audit has to be completed within 3 months from the date of commencement of audit. But what is commencement of audit? What is date of commencement of audit? So if you see here, date on which records or accounts called by audit have been made available, actual institution of audit at the place of business, whichever is later. So later of dates, later of which dates? The date on which the information is made available to the officers, or the date on which the department has started verifying. So whichever is later, that will be considered as date of commencement of audit. Let us say you have provided the books, whatever information department is asking, you provided them on 15th of January. But department came to your office on 25th of, to your premises on 25th of January and actually they started doing the audit. So what is the date of commencement? Whichever is later, 25th of January. Now 25th of January, within 3 months, from this date, within 3 months, the audit has to be completed. The audit has to be completed, but that 3 months can be extended. They will not do. Within 3 months, they will not do. So that period can be extended by a maximum period of 6 months by the commissioner. Commissioner can extend that duration for completion of the audit by 6 more months. So 3 months without any extension. If there is a valid reason, commissioner will extend that duration for 6 months. Total 9 months they will have the time for completion of the audit. Sir, how to conduct the audit and all you can see. So the PO will authorize to conduct audit with the assistance of team. They will bring the team and officials and they will observe the records and they will maintain audit notes. They will verify the documents. They will check the correctness of the turnover. And as a person, as a registered person, you have to facilitate verification. You should cooperate with the officers to complete their audit. Whatever information they are asking for, provide all that information and even to give assistance for timely completion of audit. And then finally, finalization of audit will happen. So once the audit has been finalized, within 30 days, they will inform the registered person what and all findings are there, what are the reasons, and also what are his rights and obligations against that audit report they will tell. And finally, they will proceed further with demand and recovery proceedings under section 73, 74, 74A. In case if any tax is evaded, or in case if the recipient has, in case if the registered person has availed more ITC, then they will even initiate recovery proceedings under demand and recovery proceedings under 73, 74 or 74A. Clear? Then, sir, what is special audit? Special audit means, as I have told, in case if the department is unable to do the audit, then they will appoint the chartered accountants or cost accountants to do the audit on their behalf. Then it will be called as special audit. At any stage of scrutiny, inquiry, investigation, or any other proceeding before him, officer not below the rank of assistant commissioner, if he is of the opinion that value has not been correctly declared or credit is not availed within the normal limits, with the prior approval of the commissioner, he can issue a direction to that registered person to get his accounts audited by a chartered accountant or cost accountant nominated by the commissioner. Not that they will tell to the registered person, go to some chartered accountant, go to some cost accountant and get the audit done. No, they will say, dear registered person, you have to get your accounts audited by a chartered accountant or cost accountant. We will nominate. Who will be that chartered accountant? Who will be that cost accountant? Who will do your audit? We will nominate. Get your accounts audited by the chartered accountant or cost accountant nominated by us. Not that you will go to some known chartered accountant and get the audit done. No. So chartered accountant or cost accountant will be nominated by the commissioner. And provisions of special audit shall have effect. Even if accounts are subjected to any other audits, still this audit has to undergo. And what is the time limit, sir, within which audit has to be completed? So in case if it is a cost accountant or chartered accountant, since they are experienced persons, they will be given 90 days of time. And this time can be extended by 90 more days. That's all. For usual department audit, 3 months plus 6 months extension. But here 90 days plus 90 days extension. That's all. Sir, who will bear expenses, sir? Department only will bear. Commissioner will bear. So including remuneration of chartered accountant, cost accountant, will be determined and paid by the commissioner, and such a determination shall be final. Now once the special audit is completed, even this audit report also will be circulated. This also will be made available to the registered person, shall be given an opportunity of being heard on any material gathered. On conclusion, registered person shall be informed of the findings, and thereafter, if any excess amount is required to be collected from him, or if he has availed wrong ITC, demand and recovery proceedings will be initiated under section 73, 74 or 74A. So that's all. Like this, two kinds of audits can happen: departmental audit and special audit under section number 65. Clear? So with this, we have completed assessment and audit related discussion also. Clear? So that's all for now. Today we are winding up our live for today. So remaining chapters also will be revised. As I am saying, remaining chapters also will be revised, but not through live. We will upload the videos, revision videos for the remaining chapters. Okay? Right. So take care everyone. Bye. See you.